I think Ram tells me that the traffic was not bad, so the traffic as an excuse is not there today. So. Where is Rishi? Oh, so we can get started. Oh. Yeah, Abhishek, yeah, please come. I think we can start. I'm going to in the interest of time because we have a very packed schedule for the day. First of all, let me thank you for all making it to IIM's beautiful campus. And it's also a very exciting day for a few of us who have been working on this particular project for more than a year now. So it's a culmination of a lot of hard work and also a lot of excitement about the potential applications for this particular project. So just to give you a little bit of history of how this whole thing came about. So this was literally a one-off dissertation. I think Kapil is here. Where is Kapil? Yeah. So Kapil's dissertation meeting with his committee members. So that's where I was. And while we were talking about his research, a thing struck me that some of the things that Kapil is working on with his advisor, Professor Shawdeep. Shawdeep here? Yeah. I thought we could use it in this particular context. So that's the start was literally a year back when the meeting was going on. And then after a few rounds of conversation with both Professor Shawdeep and Kapil, I got to realize that this really has a pretty big potential. So that's when it started. And then now we are here. So I'm very excited to share what we are doing. And also, more importantly, some of the potential of this particular approach is the hope that in the end of the day, we should be able to get that clear to you. My association with real estate sector itself started more than a decade back. Absolutely no background in real estate. Both my PhD as well as my research and industrial experience was in financial markets. But the only thing I knew is I was working for a hedge fund in the US that real estate was a very important asset class. And it was both from the housing side and the commercial side. It was a very important sector, enough for large hedge funds to allocate big amounts of capital for it. But when I came to India, and I'm talking about a decade back, it became very clear that the Indian market was not ready or was not there to actually tap into this asset class. And it just so happened that at that time, one of our alumni suggested that he could fund the center on real estate. And interestingly, very few faculty volunteered to be involved with the sector. So this was, I'm talking 2012. And naively, I put up my hand because I thought maybe this is an opportunity to do something. And I was literally thinking this was a very short gig, that I will do something, set it up, and hand it over to somebody who's a little bit more knowledgeable about real estate. And here I am after several years, still working on the real estate space. And fortunately for me, now I have another partner, Professor Prashant from IIM Ahmedabad. He is also a dedicated real estate researcher. So we are actually collaborating in some projects. But I think the point is that from 2012 to 2024, the sector has changed. And almost all of you are involved in the sector. You do realize that from the pre-RERA days to now, so many things have happened that has improved the outcomes in this sector. So a couple of things I wanted to bring it out because those are the kind of pillars on which we have built this particular initiative. One is institutional capital coming in a big way to the sector. As you know, the large institutional investors, they come in with their own ideas about how things have to be done, the governance standards and so on. So that is one good thing. A lot of corporate developers who have come in. That's another big thing. And then on top of it, there's one major trend that has happened, which is decision making within the sector has become more data driven. And I think that is where our partnership with CRE-Matrix, literally, I think we started conversations when they were very tiny and literally an early startup. And I think over time, both of us realized the importance of data in this sector. And more so in the commercial space, because that's where large players like large occupiers like Google or Amazon, they are trained using data back in their home country. So it becomes very easy for us to bring out the advantages of a data-driven decision making. But one thing that did strike us in this journey of data-driven decision making is that there are no objective measures. And typically in most of these sectors, I mean, if you look at it, most financial markets, there are some objective metrics that nobody even questions. And that is where the indices play a very important role. A good index, if it is done well, it's objective, reliable, and more importantly, it is based out of data that is representative in the marketplace. So that way, like for example, nobody questions the value of S&P 500 or Nifty, or because they're all based out of transactional data. But the only difference is that in an S&P 500, a stock price is a stock price, irrespective of where it's traded, because the underlying cash flows are determined by the same yardstick. But in a real estate, which is a very localized, and also the value could differ between one client or one party to another, it becomes very important that you can't just blindly take a transaction data and build an index. You need to do a little bit of controlling for various factors that could be driving the price change. And I'll give you a simple example that, let's say you see a transaction by Google. Where is Ganesh? Yeah. So Google strikes a big transaction with particular, let's say a landlord in a particular part of the market. And let's say that's the only transaction that you have. Can you take that transaction price and say, this is what the market looks like? It's very hard to do that, right? So therefore, you do need something beyond transaction data. And that is where we come in. As academics, what we do is we are very good at modeling. And the modeling techniques have become very sophisticated. So at this, with that kind of capabilities that we have, it becomes very important that as academics, we should get more and more involved in areas like this, which could help the industry, help the economy, and so on. So this particular index, and I'm sure Professor Shawdeep will talk a little bit more about how we construct it. The methodology itself is unique. So you're going to see how unique it is. And it is extremely flexible. So which means tomorrow I can take the same approach and create an index for green leasing. And again, we are doing the commercial rental space to start with, because that's where the data quality is a little bit better. But there is nothing stopping us from doing this for house prices, affordable housing. Where is Vipul? Yeah. So we have been talking about creating something like an affordable price index. So these are all things where the technology or the methodology is the same, but its application could be huge. And a good index not only provides a benchmark for evaluating performance. For example, REITs, you must have heard of real estate trust. So these are just like any other security. How do you know the REITs have done well? You can compare it against an objective benchmark like an index. Similarly, you could use a good index to create, let's say, a decision making for like, where should I invest, or where should I put in my new project? Where should I rent? So these are all decisions that can come from a good measure that captures the true price change in the economy or in the market, and then being able to forecast it. And then, of course, we do have lots of technology for forecasting as well. So this is where we thought bringing academic capabilities, marrying it with good data, putting them together in the form of an index. And one of the objectives of today is to get a lot of really heavy weights in the industry. We have developers, we have operators, we have REITs, we have occupiers. So all of them who are all part of the market to come and look at it and say, okay, this makes sense. And I think that gives us more confidence to get more involved and build more such partnerships. So this is what we want to achieve today. And hopefully you would feel the same kind of excitement that we are feeling within the academic community. So hopefully today will be a good day well spent for all of you. Okay, with that, I want to introduce my director, Professor Rishi Krishnan. He is Ram Charan's Professor of Strategy and India's foremost expert on innovation, entrepreneurship, and literally, he has written books on innovation and jugaad. So I think more importantly, from my perspective as a faculty in this institution, he has been a major driver of trying to take academic research to the industry, to the society, and have impact through that. So he's been always, every faculty meeting would always look at that as a major sort of focus of his tenure as a director. So with that, I would like to welcome Professor Rishi. Have him address.
Yeah, good morning and welcome to this important event. Venki, thanks for that nice introduction. I'm always happy when people don't read out my bio. So that's so thanks a lot for that. Let me just give you a little historical perspective on the Institute and its activities, which will in a way set the context for today's event. And then I'll just briefly say a few things about what we are doing today. Just to give you that perspective, IIMB was founded a little over 50 years ago. We just celebrated our Golden Jubilee last year. And when the institute was started in 1973, if you remember Indian economic history, India was at the peak of its sort of socialist fervor at that time. And the institute was also therefore set up with a focus on the public sector. And at that time, when we talked about public sector, we largely meant public sector enterprises. But we also had a strong focus on different sectors of the economy. In fact, when the institute was first set up, rather than having the traditional departments of a business school, we had sectoral departments representing all the different sectors which are of importance to India. We had an infrastructure sector at that time. We also had one or two professors who were working on urban habitat. I don't know exactly what they worked on at that time, but I think they looked a lot at environment and the interface with urban development. But that was the historical origin of the institute. As time passed, of course, the Indian economy changed. So by the late 80s, early 90s, reflecting the changes in the economy, IIMB also changed. And we became more business-oriented. We became more private sector-oriented. The erstwhile public sector orientation was sort of dampened down a little bit. But then another interesting thing happened around the year 2000. When we realized that while, yes, indeed, the economy had changed, but the need for government involvement and the need for public policy had not gone away. It had only changed in the way it had to operate. And that's why around the year 2000, we set up a Center for Public Policy with a focus on what you might like to call new public management, which is really how does the government and the bureaucracy contribute to the development of a modern market economy. And at that time, we also started a public policy program where we were training bureaucrats and people from the top services of the government of India and the states. So this is broadly the way the institute itself has evolved. And today we are actually riding both of these horses. We have a strong focus on business management, but we also have one pillar which is devoted to public policy and public management. The other thing that's happened in parallel with all of this is that we have developed over time different centers of excellence. Just to give you a few examples, we have a very strong supply chain management center, where again, we are trying to do some of the kind of things that Venki is doing with the real estate initiative. For example, a recent tool that we have created in the supply chain management center enables any user to measure the carbon footprint of a particular logistics network, given certain assumptions. So this is a good, a very handy app to use in case you want to figure out what is the kind of impact you're having on the environment from a logistics and transportation point of view. Similarly, we have the NS Raghavan Center for Entrepreneurial Learning, which is perhaps the biggest and most vibrant center on campus, where we are today working with as many as 1,200 startups in a year in different ways. And one of the things we are trying to do there is make sure that we are collecting data from all these enterprises so that we can use them in our research. So there's a very active data initiative as part of the NSRCL. I'm just giving you all of this background just to say that in all the work we are doing, we are trying to have a focus on how we can contribute to the growth of the country and the economy and to public policy. We're also trying to use data and all the deep technical knowledge that we have. And of course, we want all of this to also feed into the classroom. Venki didn't mention a lot of other important initiatives that the Real Estate Center here has been doing. One of them, of course, is a very successful management development program for developers and realtors, which we've been running now for over a decade in collaboration with CREDAI. And that has really helped us develop a really strong cadre of very professional managers for the broader real estate sector. In fact, I think one of the important things we have done in this context is, in a way, get the timing right, because if you look at the growth of our real estate initiative here, in a way, it's paralleled the increasing formalization of real estate in the Indian economy. And if you look at many of the examples that Venki gave in his talk, they're all different manifestations of that formalization over time. So I think we are at the right place at the right time, and this means hopefully we will see a lot more impactful work from the real estate initiative over the years. I'm very glad that Saudeep has got actively involved with this. I'm hoping that more faculty and more PhD students from our institute will also get involved over time. Let me also just briefly mention, for those of you who are not frequent visitors to IIMB, just a few things about the institute. Our main academic program is, of course, the 2-year postgraduate program in management, as it is called, which leads to an MBA degree. And we currently have an intake of 600 students in the PGP program. One cohort within the 600 is devoted to a focus on business analytics. And that's just reflecting the increasing importance of data and analytics in the contemporary economy. In addition, we have a 1-year MBA program for people with greater experience and more specialized knowledge. Typically, that program has students with experience of about 8 to 10 years before they enter. We also have a weekend MBA program, and particularly those of you who are from the Bangalore industry, I would urge you to bring this to the attention of your younger colleagues, because this is a very important and useful opportunity for those who are not able to get an MBA earlier to get a really top-class MBA from an institute like IIMB. This runs on Fridays and Saturdays over 2 years and gives you almost the same curriculum as you would get in the full-time 2-year PGP program. We have a master's program in public policy and management, which is now a hybrid program, which is offered primarily to Class A officers of the Government of India, but we are planning to open it up to others as well. And we have a very dynamic PhD program, and Kapil, who was called out earlier by Venki, has played a very important part in the development of this index. So the PhD program is also a very sort of one of the key pillars of the activities at the Institute. A couple of other things I'd just like to add before I close. We have a very strong presence in online education. So those of you who don't have the time or the bandwidth to come and attend any of our programs physically, you might like to look at some of our online courses. We are present on 2 platforms. One is called edX, which is a platform started by Harvard and MIT. The other one is called Swayam. It's a platform started by the Government of India for online learning in India. Just as an aside, which might be of interest to some of you, today students in universities across the country can take courses on Swayam for credit and get credit in their university degree programs. And IIMB is the national coordinator for management on Swayam. And we are responsible now for creating a whole bouquet of management courses on Swayam. There's already several courses being offered. And Just because you're not a student, doesn't mean you can't attend. You can certainly sign up for those courses. And if you want certification, of course, there's a little more process you have to go through, but otherwise you could just sign up and attend those courses. We've just carried this forward by creating some curated programs. I'll just mention two of them. One of them might be of interest to many of you. We have a professional certificate program on AI for managers, which is completely online. It's a very high class, very contemporary, state of the art course. And a few multinationals who have set up GCCs in Bangalore have more or less mandated that as required learning for their managers because of the importance of AI. So you might like to take a look at that. And we have another program, which is a professional certificate program on hospital management. Dr. Devi Shetty is the chair of our board of governors. And with his support, we have started this hospital management program that's again doing very well. So I would urge all of you to keep some of these programs in mind, apart from our regular face-to-face executive programs, which many of you might be familiar with. Last but not the least, I have two other programs to mention. We just started, at this stage, I guess you would call it an experiment. We started an online BBA program. This is IIMB's first bachelor's program. It's completely online. It's a BBA program with a focus on digital business and entrepreneurship. And this is meant for young students who want to get a good grounding in entrepreneurship and digital business, but they might be doing other things as well. They might be working, they might be doing another degree program. This is a kind of supplement to their entire learning process. This was inspired by a data science program that IIT Madras offers. And we just started the first cohort of this online BBA program 2 months ago. We have 1,000 students in the program. So it's off to a flying start. And we see this as scaling up over the years. This is very clearly one of the ways in which we are trying to contribute to broader education and learning in society, because in the physical context, there's only so much we can do. Finally, we are on the verge of beginning to construct a new campus that's about 25 kilometers down the road near Jigni. And the goal there is to set up a full-fledged undergraduate program in the physical mode. It's going to take some time for all of that to happen because we just got board approval for the program a couple of months ago. So we are just getting all the details worked out. But if all goes well, in a couple of years' time, we'll have that program up and running as well. So just to give, sorry, I've given you a lot of information, but I just wanted to give you a sense of all the diverse activities that IIMB is involved in. But underlining all of this, I think there are a few common characteristics. We are really focused on very high quality. We are focused on excellence and rigor in everything that we do. And you'll see that reflected in the commercial property rental index as well. And we are very keen that we make an impact and contribute to not just educating MBA students, but going well beyond that. So once again, let me welcome all of you to this event. Let me compliment Venki and the Real Estate Research Initiative for taking up this important project. And I think it very nicely complements many of the other activities they have undertaken earlier. There's one more initiative, by the way, which he didn't mention, which was a big focus on sustainability. We had a very nice workshop about a year ago in the same hall, where we are trying to figure out how can we work with the real estate community to improve sustainable outcomes in construction and all the activities they are doing. So I think really it's a wonderful canvas we have out there. And I look forward to all of you also contributing to filling out that canvas and making it much more impactful in the years to come. Thank you.
Thanks, Professor Rishi. And I think, as you mentioned, in the new campus, there's a lot of interesting opportunities for many of you in this room for both development and structuring, So with that, I want to bring in Abhishek, my partner in crime for this index. So I think also I wanted to welcome Anant from SEBI. So he managed to come in finally. Thank you.
Thank you. Thank you. So while that opens up, I don't know whether you can hear me or not. I have a story to share before I begin my presentation. Is it ready? Not yet? Sorry, that's not my presentation. No. Okay, while he does that, not that I was never a proud Indian, I'm a very, very proud Indian, but I became even more prouder when I saw a podcast by the IMF director And he gave me a very simple statistic. He said that our GDP is about 8-9% growing, and which means that we'll double our GDP every 9 years. So we are in 2024. By the time we celebrate 100 years of independence, we'll be at 25 trillion economy. If that were to happen, we need more offices. We need more of everything. We need more malls. We need more. So all the developers here, just make sure that you have a 30-hour day. You're not going to sleep. Nirupa, you can't do that. Now, on a serious note, very, very proud to hear that, which means you'll have a lot of more work and we'll have a lot of more work as well. So just wanted to share that before I start my presentation. And given that we're going to be so large, we didn't have an index. So it makes me very, very happy and proud that we have an index now in real estate. And we're going to see many more of such indices, whether it's for warehousing, whether it's for green leasing, everything. So just brace yourself up. You're going to see more of us and more of IIMB, of course, because they are throughout been with us, helped us through this entire journey. Cool. I think my presentation is ready. I won't take more than 10 minutes. No, not yet. No, since Ganesh is here, I have to say something else as well. The whole world goes to Google to search, and Google has come to us for they want to open something. We won't spill the beans. Something is happening, and they've approached us. So very, very proud of that. Thanks, Ganesh. No, by the way, I just loved the Singapore office, by the way. No reception. You just go, you have a, Steven Spielberg kind of an alien there. You punch in your number and the gentleman comes down to meet you. So I want to be in that office. What happened? Yeah. Very sorry. My stories can continue. No, so we had an, Nirupa, you were there last evening. We missed each other because I think I left a little early for the Realty Plus. Were we ready now? Do that. So I had to speak on tech innovations in real estate. And I think everybody's doing tech, right? Whether you're constructing, I'm sure you've, from what Mr. Jaishankar used to do compared to what the two sisters have brought to the table, a lot of tech has changed. So tech is everywhere. And for us, tech is data, right? And I remember 8 years back when I stood up at such a forum and I said that we're going to create an app which will tell you the unit number, floor number, building, and where Vipul stays. People laughed at me. They thought I'm drunk. But we've made that happen. We've actually made that happen. So now when I stand up and say that we'll have an app which will, you show, let's just take, I don't know, give me a building, World Trade Center at Gateway. And it'll tell you the last transactions there. It'll tell you the average rental that Nirupa is getting. Hopefully people won't laugh now because we made something happen, right? So let's see. Okay, I've said this earlier, but I just want to definitely point everybody's attention to the realistic contribution to the respective countries' GDPs. China is 26. Of course, they made ghost homes, ghost houses, so we'll discount that a little bit. But America is 18. We are at 6%. Now, when we reach the magical 25 trillion, whenever that happens, I think it'll happen at the 100th year of independence. Our contribution will be 8%. So real estate is going to be a huge contributor to our GDP, and we are all part of that. We are at about 860 million of grade A office space. All those transactions fed into this index. We'll talk more about that, but we're going to touch 4 billion square feet. We're going to cross 1 billion just next year, and we'll be the only third nation to do that. America, China, and us, right? Always I say this, Roger Federer, Djokovic, and Nadal. That's it. Hum teen hi hain. That's it. Just the three of us. So this is where all the action is. Just to give you a perspective on the same two nations who are ahead of us, this is where we are 0.86 million grade A office space, guys. Let's round it to a billion. America is at 5.5. Their economy is 28 trillion. In the next 23 years, we'll be 25 trillion. So we need more offices. They will get built. When I was heading research at Jones Lang LaSalle, at that time, we had about 20 million square feet of leasing every year in offices. That 20 became 40. Then 40 became 60. And now we are at 80. So we expect the 3-digit number to happen. And we should be very, very, very extremely proud of it. But I have a problem also, right? We spoke about wonderful things. We can be very proud, but I have a big grudge against our country, against all of you all, the developers I meant, that we only have 5 metro cities. Now, if you want to touch the 4 billion number, it cannot be in these 5 metro cities or 6 metro cities. You need to step out of the Bombay, the Delhi, the Bangalore, the Pune, the Hyderabad, the Chennai. We have put our neck out, and we believe some of these cities will be the magical tier 2 and the tier 3 cities where offices will happen. And I wanted to bring that point across, right? Without that, it is not happening. Now, Modi ji says every day, give city, give city. It took 20 years for him to reach where it is today. We need 20 more gift cities. Does anybody know how many metro cities America has? It has more than 50 metro cities. We have 5. So we have a lot of work to do. The REIT opportunity, guys, America is 100 times bigger than us. We are at about 1,100 crores, or let's just call it $11,000 million. America is 100 times bigger than us. So if all of those offices are going to get built, a significant portion will get built with institutional capital. And for that, you need to have an index. This industry was just waiting forever to have an index. And finally, we have done it. Very, very proud, not only as the CEO of CRE-Matrix, but very proud as an Indian that we have an index now. Now, this is the coverage of the index. In a few minutes or 10 minutes, we'll have the index launched. So I'm not allowed to, again, in the boundaries of the NDA, not allowed to spill what the index is going to say, but you'll see that very, very soon. We have covered 10 cities. We have gone back 12 years. We have gone to about 834 developers. How many members does CREDI have? 2,000, 3,000? We have covered a fair bit of them because we have covered grade A assets, 10,000, but majority housing, right? We have covered more than 150,000 transactions. So the index is backed with the most authentic, accurate, and comprehensive data. And we should be very proud about that. But this is just the beginning. The baby has been produced or will be produced in the next few minutes. But now we need to nurture it into a handsome adult or a beautiful looking lady, whatever. So abhi to kaam shuru hua hai. We've just started work now. Right, Professor? And then when we see success, we're going to have a warehousing index because warehousing is going to be big in India. We can't imagine how big warehousing can get. And of course, even green buildings. We'll pick some top developers and maybe even have an index for that, right? Like how you have Nifty 30. So yes, we're going to pick a lot of more, you're going to see a lot of more indices of various kinds to make sense out of those. That's my time. Thank you very much for coming and gracing this event. And I'll probably meet everybody outside and during the session. Thank you so much.
Since we are horribly behind time, I'm going to make one sentence introduction to our chief guest, Anant Narayan. He has straddled academia, industry, academia, and now a regulator. So he's worn all hats. Just a couple of days back, I was in a meeting with him on the usefulness of data-driven decision-making, even for the regulators. So with that, Anant, please.
Thanks a lot, Venki. Professor Rishikesh, Abhishek, right? For having me here. Um, as SEBI, as a securities market regulator, we are not necessarily experts on real estate. That's not our ken. But I'm reminded of this old story. Um, you know, there's this boy who wasn't very good at Hindi, and the only way he could ever pass an examination was to try and guess what the essay topic would be and prepare for it in advance and sort of just go out and vomit out. So he prepared for the essay topic of a football match. And he lands up at the exam and he finds that the topic is man's journey to the moon. So he starts off by saying 22 people went on a rocket to the moon and played a football match there, and then went on to describe the football match. So you give me a topic like real estate, I will still take it to the securities market in some way or the other. I wanted to break this up into three parts. First, on this index itself, which I know Venki and the team have done a fantastic job on. We can't wait to see the innards of this particular index and see how it works. The second, about the unique data architecture that we have in India, which is so rich for things like data analytics that Professor Rishikesh mentioned. And finally, the whole process of regulations and regulation making in India, which again needs a lot of debate and consultation. On the first bit, we are really excited about the launch of this particular index. Abhishek mentioned REITs and how we are still skimming the surface as far as REITs in India is concerned. There's no doubt about that there's a huge potential for the REITs market in India, which comes under SEBI, by the way. We have about 6 REITs registered with us with total assets of about 1.4 lakh crores. They barely manage about 13% of grade A commercial property in India at this point in time. In US, in Singapore, in major markets, you often have REITs covering about 60 to 80% of grade A commercial property. And in terms of market cap, as Abhishek mentioned, it's really tiny. If you compare it by any metric, our REITs, market cap versus GDP versus market cap of equities, by any metric, we are far, far behind what the rest of the world is. Few things that need to be done in terms of growing this space. And a big part of that is on the investor side in terms of awareness and in terms of trust. And in both this journey of both awareness as well as trust, things like indices can play a critical role. People are aware of Nifty, people are aware of Sensex, people are aware of NASDAQ and Dow Jones and S&P 500. We need that kind of familiarity when it comes to real estate and the fact that there are opportunities to invest in real estate in the country. In fact, I would go one step ahead beyond REITs into something which is developing into a unique feature of the Indian markets, which is InvITs. We were discussing the chairperson of SEBI and the 4 members. Between InvITs, REITs, and monetization of all running assets being run by the government in every form, including municipalities and local government, we reckon that the potential for monetization is probably equal to the GDP of the country. So if your market cap of the equity space is 140% of GDP, there's no reason why the monetization space of these infrastructure assets, real estate assets, and all assets being held by the government, which are productive assets, should be in that order of magnitude as well. We have a long, long way to go there. In fact, there is so much of attention on the equity markets. We just wish there was more of asset allocation happening towards this kind of space, the real estate space, the infrastructure space. And indices like this are super important for both awareness as well as trust. On trust, I want to leave one more thought with, I see a lot of industry folks here. In this nascent industry, and by the way, it goes beyond REITs, it goes beyond real estate, valuation remains a crucial area where a lot of work needs to happen on trust. Now, as regulators, we are lousy in figuring out what valuation ought to be. We'll never do that job right. You had those old days of the controller of capital issues in India, which would decide what the IPO price of a stock ought to be, which is the most ludicrous concept that you can think of today. So I'm treading on thin ice here. I don't want to talk too much about valuation because as regulators, we don't understand it. But there are a couple of issues that kind of need a bit of attention. The first is a bit of regulatory requirement and between other regulators and us, whether it's RBI, whether it's us, whether it's IRDA, whether it's PFRDA, we do have this theoretical debate about what should be our approach towards valuation agencies. Remember, all these regulators, including SEBI, we do interact with valuation agencies, but we don't regulate them really. Now, it's a very similar parallel to what happens in the credit rating agency universe, right? Where we have no idea what the credit rating of a paper ought to be, but we do regulate credit rating agencies. What do we do then? We ensure there's adequate disclosures, which means if you have a AAA paper which rapidly descends to D, we want you to disclose that to the ecosystem so that everybody knows what your ratings are worth. We also want some consequences of this kind of activity happening. Third, most importantly, we want to ensure there is no conflict of interest, which means given that the issuer typically appoints the rating agency and the valuation agency, by the way, by extension, there is an inherent perception of a conflict of interest. There shouldn't be rating shopping, and there certainly shouldn't be valuation shopping. And there should be consequences and checks and balances to ensure that that doesn't happen. This is a space I would love to have a debate with the likes of Professor Venki to guide us on what really we need to do. But the reality is there has to be trust in the ecosystem, and we don't want whispers around water cooler chats and people having coffee and saying iska valuation to bakwas hai. That is the thing which can sap the energy out of the ecosystem completely and set back capital formation by a long, long way. The second thing on valuation, given that we are not experts, I would really want stakeholders such as academia, such as Professor Venki and others, industry experts here, to opine on valuation. We are a disclosure-based regime, whether it's IPO, DRHPs, or whether it's REITs. We ask that valuation methodologies should be made public. So in REITs specifically, we have a requirement that the valuation agency should make its process public or its assumptions public. We want you to challenge that. We will not. Our job stops at disclosure, but we would love robust discussions where you step in and say, hang on, this valuation doesn't make sense. So that there is a trust which builds in the ecosystem. There is some amount of trust which has been built around equity valuations in the secondary market. We would love to see the same kind of trust develop around things like real estate and other assets as well. So that's my spiel about real estate and the index and what it can do for the REITs and InvITs and munis and all of that space really, and something we'll watch very, very closely. The second, I'm going to go into my football match from the man's journey to the moon now, which is about the unique nature of the data architecture in India. And Abhishek mentioned this, that, in many ways, of course, we have a lot to learn from developed markets. There's no doubt about it. It's a learning journey as we grow, as we go through our growth pangs, we have to learn from other markets as well. But in many ways, we set the benchmark for others. I'm going to give you a bit of examples from the equity space and try and lead that to other things as well. For instance, and most of you would be familiar with equity markets, the exchanges in India, the large exchanges in India, know details of which individual investor is doing what in the markets. We have this concept of a unique client code. The exchange knows which client is buying and selling which stock and doing what in derivatives, etc., etc. In most other markets, the exchange only knows which broker, the member, is dealing with it. The end client, the exchange has no clue. Similarly, our depositories, where all of you hold your equities and your mutual fund units, some mutual fund units, now listed stocks as well, unlisted stocks as well. Each of us holds a depository, a demat account in some depository. That's not the architecture globally. Globally, you would hold an account with a broker dealer or a custodian, who in turn would hold an account with the depository. So in India, we have visibility at the depository, at the exchange, at the clearing corporation of what every individual is doing. That's a wealth of data available, all consolidated at these market infrastructure institutions. So when SEBI came out with this first research in Jan 2023, and then subsequently a few months back, on what happens in the F&O markets, where we said in Jan 2023 that 89% of all individuals lose money in F&O. We updated that study a couple of months back to say 93% of all individuals who have traded over the last 3 years have lost money in F&O. We know that not by way of a sample. We've seen 100% of the data. That's an incredible analysis, unthinkable in most jurisdictions. Most countries would do this on a sample basis with some broker data and fight for the data and try and do it. We could do it uniformly across the ecosystem. We did a similar study for intraday activity of guys and girls buying and selling stocks the same day. We found 70% of all individuals who trade intraday lose money. It's actually 50-50. It's a toss of a coin. That additional 20% is transaction cost, which queers the pitch, makes it a 70-30 equation. We could do this for 100% of everyone trading in intraday markets over a 1 year period. Likewise, we looked at the activity of what happens in IPOs. And what we found is that so-called retail long-term investors are actually anything but that. They're all flippers who come in and exit within a week. And they exit, especially if the stock price is higher than the listing price, and they don't exit that much in case there's a loss. So it's an entirely flipping behavior. And the statistics came out again for the universe of all of what we see. This goes beyond analysis of this kind. For instance, because we have granular data available at a GDP household savings level, we are in a position to calculate bottom up what is the household savings of India when it comes to the securities market ecosystem. Everywhere in the world, you use some kind of approximation or a back calculation to fill in the blanks. Here, you can actually get the number bottoms up. We don't still use that, by the way. We still use an estimation that RBI and the statistics organization does. But we are in dialogue with them to say, you know what, you don't have to estimate. We can give you the accurate number, which is right to the last paisa, because we know data at that particular level. The reason I'm saying all this is, this data does not belong to SEBI. It does not belong to NSE and BSE or to NSDL and CDSL. It belongs to all of us. You have the right to ask for this data, torture it, and come out with your studies and conclusions. We want that to happen. Now, obviously, we can't share PAN-level data, confidential data, privacy is important. So we have to mask certain things, and we can't give you data in a form where you can guess who the entity is. So we have to be careful about those things. But otherwise, the data is available. So what sometimes frustrates me, there is so much of big data available and logically even collated data available, which we're not using. Why should it be left to a Sarkari Babu like SEBI to try and do analysis and come out with insights? We've got so many bright young people in industry, in academia. Get the damn data, do your analysis, and give us insights. So we've come out with this, I think on October 8th, we came out with this consultation where we are suggesting that each of the MIIs, as we call them, which is the exchanges, the depositories, the clearing corporations, will have a policy on sharing data. Data which does not have any individual identity can be shared for free. They won't charge you. This is not their data. This is public data. This is a public good. Now, only if you're asking for data beyond 2 gigabytes or you're asking for processing of data, then they will charge you cost, as per cost. But otherwise, the data is available. Please use it. Do not be shy of asking for the data. Do what you want with it. We want that analysis to happen. The last bit that I wanted to discuss was around the question of policy making. Now, this is the day and age of social media. Our attention spans are kind of dropping quite rapidly. We have time for YouTube shorts, Insta posts, breaking news, it kind of pays to be somebody who has very quick and decisive views, put it out on social media, conclusive, declare a verdict, and then no discussion. I'm not going to judge this particular, we all go through these phases. Maybe it's all for the good, maybe it's right. But as policymakers and as industry folk taking economic decisions, and as stakeholders interested in an ecosystem which is thriving and needs to grow up to a very, very large economy, we need analytics and we need smart analysis. We need a lot of insights. Now, as regulators, there are two types of errors that we can make. You won't normally hear of regulators talking about errors. We only talk about our successes. But let me talk about our errors. The first error is the type 1 error, where we allow bad things to happen. So when a Harshad Mehta happens, or a Ketan Parekh happens, or an Enron happens, the first question that comes up is, what the hell were you regulators doing? You were asleep at the wheel. Everybody knew this. You guys are the worst. So as regulators, we absolutely are petrified at the possibility of type 1 errors. We do everything we can to avoid type 1 errors because the stigma attached with a type 1 error is just too much. Pick up any book on derivatives, pick up any book on market, financial stability. You'll hear horror stories of all the type 1 errors which cause so much of grief around the world. A lot of discussion around that. There is a type 2 error. When we start to put up a regulatory ecosystem which is so tight, which is so onerous, in our zeal to try and avoid type 1 errors, we could end up stopping genuine good people from doing good business. The cost of compliance, sometimes the impossibility of compliance. When we come in the way of good business, that's a type 2 error. The reality is, as an ecosystem, we've got to ensure we minimize both. It's not an optimization. It's a minimization of both. Statistically, that's impossible. You can't bring down type 1 and type 2 errors together. But that's where the statistics analogy goes away. Here is an ecosystem where you have to bring down both errors. This is where we as regulators need tons of help. Regulations are too important to be left to regulators alone. We don't have the insights you guys have. Sitting in our ivory towers in SEBI, we cannot figure out what happens on the ground. Now, how are we trying to address that? And what is my ask of you? We try and consult as much as we can. So we actually have advisory committees. I see Vipul Rungta here, who's part of the AIF advisory committee, for instance. So we have very good advisory committees, which are very, very distinguished, full of people from the industry, from academia, from investors, from even media, all of them put together. And then we have discussions with them, often initiated by us, sometimes initiated by them, saying, what is the next change that's required, both for improving investor protection and for improving market development and all of that. We have a lot of debate there. Once we agree on something, or even if we don't agree on something, there is something that needs to be debated further, we put out a consultation paper. I mentioned the October 8th consultation paper on data sharing. We put out consultation papers and we get a lot of responses. Thereafter, we take the final response again back to the advisory committee and then eventually to our board. I'm just one voting member of the SEBI board. There are 9 members in all. All 9 have to agree. Typically, we work on a consensus. So there's a whole process that we try and follow with lots of checks and balances. But any system is only as good as your participation in it. What we often find is that critical feedback does not come through this process. Once the regulation comes out, then people wake up and say, oh my God, what have you guys done? My earnest request to you is, please be involved in the process. If you need time to come and meet us and educate us, do that. We are hungry for education. Come to us not with lazy analysis or statements such as, you guys are too oppressive and it's very onerous. Tell us actionable stuff. Don't give us motherhoods. We hear it all the time. And we have social media if you want motherhoods. Tell us actionable, what is it that you want changed? What should we start doing? What should we stop doing? And back it up with analysis. When I link back to what I said about get the data. Take the data. We are not hiding it. Take the damn data, do the analysis, come and tell us what needs to change. And most importantly, be trusted advisors. As regulators, we see a lot of rubbish happening in the market. I've looked after surveillance in SEBI. I can tell you stories about the kind of front running and insider trading cases I've seen. I've seen stuff around AIFs being misused clearly as vehicles to circumvent existing regulations. Practically every regulated entity that we see, we've seen funny stuff happening. So our minds are colored by these type 1 errors. We would really appreciate if we heard about these type 1 errors from you in the industry rather than us finding out the hard way, either through an inspection or through some media friend telling us, take a look at this. It really saps the trust if we find egregious misbehavior, which the industry has not whispered to us about. I've had cases where I've called up friends in the industry and say, my God, did you know that this is happening in your industry? And the friend says, हाँ, ये तो होता है. Not only this, much more happens. Arey, why didn't you tell us? Why do we have to find the hard way? It's so important to build that bridge as a trusted advisor so that we can learn to trust you. And when you give us a recommendation, we don't start looking as to what is your end goal in pushing for this. So my last pitch is, whether it's through indices like the kind that Venki and team have put together, whether it's through analytics, whether it's through insights, whether it's through education, please be a part of this regulatory journey. We cannot afford to have type 2 errors. We don't talk about it enough. But while we try and stop our type 1 errors, we need your help to ensure that there are no type 2 errors as well. One of the things that we have tried to do is, even when we implement a regulation, we try to take inputs from the industry on what are the do's and don'ts at the ground level for you to follow, so that we know what's possible for a good person, what's difficult for a tough person, so that we achieve what we have to achieve. But be a part of the process. It's easy to be an armchair, lazy critic. It's easy to be a cynic and say the whole world sucks. A lot of the fears, by the way, might be true. I don't dispute that. But especially as we have this beautiful journey in front of us, it pays to be a little bit hopeful, engage, and take some trust in the ecosystem. So in summary, thank you so much again, Venki, for putting this index together. We look forward to seeing what's there in this. We really hope this plays an important role in the awesome journey that's ahead for REITs, InvITs, Munis, the entire ecosystem. Plenty of data available there, guys and girls. Please use that, do the analysis, give us insights, teach us what we need to know, and please be a part of the regulatory ecosystem and avoid both type 1 and type 2 errors. Thank you very much once again.
Thanks, Anant. You just opened the door to a lot of PhD students who are going to knock on SEBIs for data. So what we're going to do is we're just going to quickly release the index. So in the interest of sustainability, we just have printed a few for the people in the podium. And then we're going to have a QR code where you can download the index into your phones and you can see it there. And then we're going to have a half-an-hour session with the people who have created the index, and also the interpretation of what we have done with the first release. So this is going to be a little bit more technical. So we're going to also open it up for some Q&A. So that way you get an understanding of what goes behind the index. Yeah. We should open it up. Yeah, so we are about 10 minutes behind. We try to speed it up, but please bear with us. Thank you.
Yeah, it should be here. Can you open it up?
Maybe a minute or two so that people can scan the QR.
Oh, okay. In the background. It's already downloaded.
Okay, the thing is, I think everyone is done. That's fine. Yeah.
Thanks, Venki, for giving me this opportunity to, for giving me this opportunity to present about the index. While we set up, I'll also add a couple of points on how it started. So I think Venki mentioned that he saw this work, what Kapil was doing during one of the presentations, but it actually started maybe 1 or 2 years before that, when I was teaching a course and I gave an assignment on house price prediction problem. So this was a forecasting competition for all of the students involved in that particular course. What was really interesting is that after the course was done, Kapil came to me and said that he wants to do his dissertation research on things related to house price. So it essentially tells us that classroom teaching is not at all bad. It leads to great things, as we are seeing here. And just like Venki said, I also had no interaction with real estate markets before that. I come from a very statistics background. I think for over 15 years, I have studied that thing only. But being here in IIM Bangalore makes you do things that you never imagined before. So my entire association with all statistics departments led to work on the theory side of it. But after coming here, I started working more on the application part of it. So this work, that the fact that we are here, it not just shows the collaboration between academia and industry, but it also shows the collaboration between different areas. So I come from statistics, and in here it's called decision sciences area, but Venki is in finance area. So that presentation itself by Kapil helped us in developing a lot of joint collaborations in different types of research directions. This is just one of it, but you can expect to see more interesting things from us, not just this kind of index, but maybe a lot of more interesting things going forward. So with that, I will start the presentations. The document that you have downloaded, you must see this page over there. So I just wanted to highlight who are the key contributors. Of course, we have the amazing CRE-Matrix team who have provided us with the data and have worked with us throughout the time to help us see what we are finding from our modeling, what the results are showing, and whether it makes sense. So they have a major expertise in the real estate sector, and all of them, Abhishek, you have seen on stage. Abhishek Tiwari is also sitting somewhere, and Pranav is here, so he will also talk about the interpretations of it. And as you have seen, me, Venki, and Kapil, we are from the IIMB side who have worked on this index. So I'm fortunately or unfortunately, the next few minutes is going to be a little bit more technical. So I will try to explain it as best as I can. What we are essentially trying to do is to develop something called a spatiotemporal model. And the objective is to track pricing trends. Right now, we are working with various markets, 10 particular markets, which actually host, I think, more than 90% of the office stocks. And we are focusing on the commercial space. But that being said, I think it has been highlighted before, we have the plans to extend this further. We can work with affordable housing. We had a chat with someone, Vipul, I think we had a chat with regarding this one. We are also thinking about green index. So there is actually a lot of opportunity in leveraging the methodology that we have started with. And our approach is pretty robust, flexible. It allows us to improve upon the current methodology. If you want us to bring in more interesting insights, or if you want to, let's say 2 years down the line, there is a lot of new types of data, we can quickly adapt to that new set of data and can improve upon the methodology that we have created. But at the core of it, what we have is called a spatiotemporal model. So I'll just give a quick overview of what it means. As you can see here, it's actually the map of Bangalore. Maybe it's not clearly visible from the back. So there are certain points which represents different office buildings. This is the real data that we are working with, just a snapshot of it. So on the left-hand side, let's say that's the first observation we have got from the first year. Then we have got, again, a new set of observations for the next year or next month, whatever granularity we want to work with. Then we again get another set of observations in the third time point. The idea of spatial dependence is that if two office spaces are nearby, then we will see similar co-movements in the pricing. Now, it might happen that one of the office space never had any transactions during the time period we are looking at, but other spaces had certain transactions. So our spatial modeling approach leverages information from those other spaces and tries to guess what would be the price if there is a new transaction at the location where we have not seen anything. And we do it in a continuous scale. So essentially, we ensure that the entire region we have, we can cover it through our modeling technique, even if there are not enough transactions from all around the city. In the same way, we also do it in a continuous framework for the time domain. So today, whatever is the price, how it would impact tomorrow, how it would impact 1 month from now, and so on. So that's the advantage of our methodology, where we are leveraging both these types of dependence or correlation, and we innovate that into creating this index. The philosophy is that we are capturing the spatial and temporal dependencies, and what we are essentially saying is that overall market trend can be estimated by looking at whatever data we have. We don't need to have complete data from all around the city all the time. Whatever data we have, we can leverage that information and try to, for the lack of a better word, extrapolate it to other spaces or other time points. And entire methodology is run using a robust Bayesian technique. One of the reasons is that it would help us in quick updation of the methodology. So those who are unfamiliar with the word Bayesian, it means that we take advantage of prior information, we bring in the new data, we merge them together to provide the latest values for everything. In that sense, computationally, we are doing quite well, and we can actually provide you in this index in real time as well, if needed. And finally, our approach is scalable at multiple levels. The report that you are seeing now, it has the index at a city level and also at a micro market level, at a macro market level. However, if you want, we can provide you the index at a building level. We can provide you the index at an hourly level. So we can go down to any granularity you would want us to. Right now, I think it makes sense to look at the index at a quarterly scale and at a city or a macro market level, but we have the flexibility to do it all around the time. So what goes into the model is perhaps represented well by this structure. We have impact of several building level information. So it might be age of the building, grade of the building, the length of the lease, whatever are the requirements that may add a premium to the price. Other than that, every other information is coming from that spatial and temporal impact. We do not provide explicit information about developments or other things which may impact the pricing. What we do is that we let our model figure out these kinds of dependence by entirely relying on the transactions that are happening in real time. With that, this spatial component and the temporal component we are estimating, that leads to the creation of the rental index. So there is you can understand there's a lot of mathematical formulation behind it, and we will roll out a working paper very soon. You can look out those details over there. The main advantage of the index, as I have said, it's entirely scientific. We don't rely only on the price. What we rely on is the movement or co-movement of price. And that way, we can take out the effect of other amenities or other facilities that every building is providing, which might be increasing or decreasing the price in certain ways, but may not reflect the true market trend. So our index captures essentially the true market trend that we are observing. We are also continuously tracking all of the data that we have, which means if there are active leases which has been renewed, it is captured in a different way as compared to something that has closed or if a new lease is coming out. And we are covering all of the building grades. The results you are seeing are grade A and A+, but I think Venki pointed it out. We have the option and we have the plans to extend it to other grades as well. I believe grade B and C are not covered in detail in today's world. So what we are trying to do is to provide a comprehensive coverage of everything. Of course, real question is who will benefit from it? You have got the idea. Here is just a list of people which I believe is going to be really fascinated to see the usage of this index. So it covers investors, developers, REITs, urban planners or policymakers, as well as corporate tenants. All of them can take advantage of the interpretation of the index in a nice way. And I think that's where Pranav comes in. He will give you an overview of what the index looks like for a couple of cases and explain it very well.
Thank you, Professor Saudi. My name is Pranav. I head the research and consulting team at CRE-Matrix. So we love data, right? And someone said, why do we need an index? And can you quantify this? Guys, a banana was sold for $6.2 million recently. and that has an index. Can you believe it? Those valuables have an index, and a building which is right now on the block does not have an index in India. So I just put a number on that. Okay. Before we deep dive into the index, I would like to point out that we are the only country, one of the only countries where this can happen. Now, on the left-hand side is a lease transaction, which was registered in India, which we accumulate across all cities. And on the right-hand side is the resultant index. And in between, all the magic has happened between IIM and CRE. We are the only country, India is the only country where this has happened. Every other index in every other country is based on some assumptions and maybe some factual data, but our index has 100% factual data, which no one can debate on. So this is coming right from the registrar office to the index. Okay, obviously my analyst friends would grill me after the index is launched, that why things are moving up and things are moving down. We know rentals play in a very different way. Someone does it for headlines. Maybe someone signs it at 40 rupees where the market is at 50 or 100 rupees. So what we have taken as a base for the index is the effective rent. Now, what does effective rent do? It takes into account all the escalations that happen throughout the lease period. So if the first period is 40 rupees and then if the escalation is 50%, it's all going to come back to an effective rent, right? The lease term. So we are adjusting for very, very long leases, which have a discounting on the rentals. And then we have security deposit, which we assume is 6 months is normal. And anything which is abnormal, we quantify that as well to ensure our effective rent takes that into the consideration. Rent-free period, a lot of deals happen where a lot of rent-free period is given out. So we adjust that as well. We quantify each rent-free period and the moratorium period. There is also an interest on security deposit and the car parking charges. So what we have ensured with this effective rent is that no hidden quantitative measures are left out. If there is a deep discount or a deep premium, it is normalized. Okay, so this is the big takeaway. For the last 8 quarters in the history of our 50 quarters that we have analyzed since 2012 to 2024, the last 8 quarters have seen 4 of the last 8 quarters have seen all 10 cities growing in a positive number. The index has, and this has never happened before. So right now, if I say the office market is in a boom, we have just proven that. Okay, so which city has outperformed? Surprisingly, I mean, we would all say Bangalore, or maybe Mumbai. But Pune, over the 12-year CAGR, and I know some of my analyst friends will say, why are you taking a 12-year? We also have a 5-year and 10-year analysis in place. But Pune has really, really outperformed, and it's come out on top with a 6.9%. A lot of factors have gone into that. We'll just come into, we'll see the details for that as well. And 4 out of 10 of these cities have seen an increase of more than 5% over that 12-year period. So wherever we say 5% is the benchmark per year for rentals, at least 4 of the cities are performing pretty well. Okay, why has Pune outperformed? And this is the index of Pune. You can see there was a slight blip during the COVID period where the red bars came down. So Pune has always seen more demand than supply. Similar to Bangalore, but the extent of that demand to supply ratio is more in Pune. As a result, the vacancies are lower. There's a lot of GCC presence moving towards Pune. From Bangalore and Mumbai, they are preferring cities like Pune because of all the educational institutes, and obviously the housing plays a big role in Pune. And housing has Pune has again outperformed every other city in terms of housing as well. Infrastructure, yes, Pune has their own. I mean, the city has its own metro, and that has also played a big role in this. So yeah, with that, I leave for any questions if you have.
So we're going to have some Q&A. Yeah, we're going to have some Q&A around the index. So please feel free to probe them because this is our first step. And we, as I think Anant mentioned earlier about the partnership, we in academia also need to partner with industry so that the end outcome is good. And the second thing is, after the discussion, we will take a short coffee and tea break. Then we'll come back for two very interesting panels. One is the occupier owner perspective and the operator perspective. And then we're going to have a discussion, a freewheeling discussion with Vipul on how do we take this to the resi space, because the resi is the bigger market in terms of, and also more important from a policy perspective. So that's something that we're going to do. And then after that, we close down for lunch. So please feel free to, yeah. Give him a mic.
Hi, morning. If you can just walk us through the findings for Bangalore and also kind of elaborate on why the GCCs are moving to Pune and other cities from Bangalore. So these two stuff. Yeah, if you can just elaborate on your findings for Bangalore, what were the key findings? Where does Bangalore need to improve? And our second thing on GCC. Thanks.
So Bangalore has, I mean, that's the largest city in terms of office market, about 230 million square feet of stock. Bangalore also has seen a lot of demand overtaking supply. Hence, the vacancies are the lowest across all cities. But Pune has an advantage in terms of the housing being relatively affordable. The talent which is available for GCCs, which is Pune, is also scoring very. It's very similar to Bangalore as well. I won't say that Pune has taken a larger chunk of GCCs as compared to Bangalore, but the pricing and the rentals which are being paid by GCC in Pune are relatively on the higher side. So with an index, we are not comparing the absolute values. We are comparing the percentage increases. So Pune has seen GCCs paying higher over a period of time, but Bangalore has not seen that.
Can I just sort of setting the house rules for this, for the Q&A? I think I would love more questioning on how we created the index as opposed to the interpretation of why something happened and did not happen, because that is subjective. So I think we have CRE-Matrix, which does a lot of work, but I don't want to keep that as the last word on what's really happening in the marketplace. There are lots of very high-powered individuals who probably know a lot more. So let's keep the questions to the methodology and how we are, if there are anything that particularly you can ask, did we cover that or something like that? So Nirupa? Yeah.
Thanks. So I had two questions. One was on the data that you have is based on registrations that are done. So only once a tenant registers with the builder or the owner or the landlord of the building will you get that data. Typically, once a deal is done, by the timeline for it to register takes at least 9 months, maybe a year, because the first you get your term sheet done, then you get your SHA done, then you have the fit out period, then then maybe the registration. So is the data, is there a lag in the data, maybe 6 months to a year or 9 months? That's the question one. And after you answer this, I'll ask the second one.
So for the most recent quarters, there could be a lag. But if you want to analyze anything which is beyond 2 quarters, there will be no lag because all those registrations would have happened till now. And I won't say it takes about 8 to 9 months. We see a lot of pre-leasing happening as well. So maybe someone who wants to move into a building after 6 months, they would register immediately now. So I mean, we have a lot of, I mean, there is no uniformity in registrations. But from a lag perspective, I would say only the last quarter could see a month or two long lag. Otherwise, there is.
So Nirupa, the answer is yes. We only work with data that has come to registration. If there is a systematic lag, our results would be colored by the lag. So that's a fair point. But on the other hand, we don't have access to the data that the developer would have, which is at the time when it got struck first. So I think this is a good start. And as the market matures, we may have access to the other kinds of data.
Don't you think it makes sense that when you give that data out for the sake of, you should probably say that 6 months back is with X percentage of error and last 6 months, and if you give last quarter or you give last month, it is a Y percentage of error. It would be, any model or any statistical thing has to have
No, so
what is the
that is
error.
absolutely correct. We have taken into account the reliability of our model into the estimation of the index. So which also means that, I mean, if there is data quality issues, the reliability will be less. And then when we project it further, we actually put less importance on the last quarter, where we believe that there is data quality issues or data availability issues. It's connected to the variability. What index you are seeing, it has explicitly taken it into account. So that's the statistical uncertainty we're talking about. That's there in the model.
So one, just to add to what Vipul, I think what we are trying to do is what is in the public domain that we can take and then apply it for decision making. So if suppose this is like whatever what Nirupa was saying is in the private domain, then suppose if I have to take it and try to make a, let's say, a decision on investing or where to develop, I won't have that data unless I go to a IPC who will give me the data, but they'll only give me their side of the data, right? So in that respect, this is a problem. I mean, it happens in financial markets too, where there is a private over-the-counter transactions which happen, which you never get to see. And by the time the print happens, it might take a longer time, let's say in bond markets and so on. Yeah. Nirupa had a second question and then Jaggi. Yeah, sure.
Nirupa's point is very valid. You said pre-leasing. I don't see any client doing registration of a pre-lease today because regulatory environment is such that you get leases registered post OC. So I think Nirupa's point is very valid that there will be a lag to this data. So that's number one. Number two, also from a perspective of you said, so it's post you get your OC or post you get occupancy certificate or you post the client comes in, you have a 4-month window period for you to get your leases registered. And given our stamp duty and registration cost, nobody pays pre-lease as well as, so those days are gone. And because also to the point of what Mr. Anant was making is institutionalization of real estate is helping the larger occupiers to believe in developers who actually can deliver. So you don't have that big doubt that this building will get delivered on time or on.
So Jaggi and Nirupa and also Vipul, is there a way for us to get access? I wouldn't say access because then I'll have to go to all the different developers. Is there a way to reduce the effect of the lag? I mean, is there a methodology or any?
It's very simple. If you're in October, you should say that you release data till March 24. You take that lag and assume, see, please understand that today if you are nowhere, the credibility becomes a very, very important factor for anything. And the whole premise of this entire thing is that you are bringing credibility, which is data backed, to something which is non-credible and non-data backed. In that case, my 2-bit would be that put the error right on the face. If you think 3 to 6 months, you say we have assumed a 6-month lag. So our data is accurate as on March.
So let me flip it the other way. I would rather not put a time because the time is endogenous, right? I mean, today it may be 6 months, tomorrow it could be 3 months. So unless I keep up to date on what's going on, it's very hard for us. So we will say this is how we take the registration data and this is what the index is. The market players can interpret it. If some people have a better information that this is 6 months, they'll take it. So I'm just saying for us, it is better to keep it sacrosanct that this is based on registrations. And if there is a lag in the underlying registration data, that is beyond the scope of us. That's up to the people. And I'm assuming a lot of analysts who are going to use the index, then they will come up with that interpretation, which I think would be a better model than us trying to account for that. Yeah.
No, I agree. It's better to go with 100% accurate data and just go based on registrations. Second question, I think there you mentioned in a couple of places about the gradation of the building, tier 2 or grade A, grade B. So on what basis are you doing that? So if you could just elaborate on that.
Fantastic. So we have 10 parameters which we have defined. Obviously, there is not a global grading standard, but we at CRE-Matrix have defined 10 parameters on which we are grading every building, and that is changing with time. So a building which was graded A plus 10 years back may not have been, may not be A plus today. So we are changing that as well. So grading is a function of time as well, and a number of 10 different parameters. For example, the facade, the amenities, the green certification that the building has, that goes, and each of these 10 parameters have a different weightage. So just a facade will not have a big weightage, but a green parameter will have a larger weightage today. So, having the LEED certified buildings and all those things may now fall into grade A, but there are other parameters which come into grade A plus.
Through the entire 10 parameters to grade them as A plus, A or B. So don't be surprised if we come up with a grade B index as well.
And it's not a thumb rule that a strata will always attract a 10%. Because if you see Gurgaon CBD, an EMAR building will be of a grade A plus quality, but maybe a strata building, right? So we see a lot of parameters around that building. Since we have all the documents, all the certifications that they have applied for, we do a quantitative study to arrive at grading of each building.
Nirupa, to answer your question on the grading, grading is fairly straightforward. As Abhishek said, there are 10 parameters. There are probably more than 10 parameters because it's asset management also, right? While you sell strata, someone like you is also bringing those investor spaces together, asset managing and giving it to. No, you can treat it parallelly because there is asset management, right? Versus a smaller building on Banagata Road where you're dealing with different landlords, etc., right? So that benchmark there, you guys, Prestige, all of you guys do it. KRC's done it. The institutional play is very different when it's institutionally owned, and that's what occupiers also want. They don't want to deal with 100 landlords. We've seen that. I think the bigger challenge you have is super built up area and carpet area, which you're not touching about. And I know Abhishek and me have spoken about this because there's a fudge in super built carpet area, right? Efficiency of product. I mean, we've seen developers come back and change super built carpet area when they renew leases, which is shocking, right? Nobody follows BOMA standards in India. I think that's the biggest problem we have. So while the matrix is good to come and create this benchmark and the rental index, I think our bigger problem is when you do residential with RERA and developers who are selling commercial is great when you're following RERA. But when you're leasing space, there is no quantification of super built. We fight it out for every negotiation. That's a big negotiation point. What is the real efficiency of that space? What am I paying for?
Yeah,
And that's
actually,
another big point.
just a thing. Again, I'm taking a academic hat on this. I'm just going back in financial markets. For example, when the first bond index came, bonds were traded over the counter, extremely liquid market. So the pricing is dubious. So, but the index came out because the asset managers wanted some benchmarks. But then what happened subsequently is that the issues of, staleness in the data, they were highlighted by the index. So then there was a lot of pressure from the regulators, from the market industry to clean up the definitions, to ensure some degree of transparency, to ensure that, the underlying data gets released earlier. So I'm assuming that's going to happen in this case also. As you rightly pointed, Ram, there could be a lot of subjectivity that is going on right now, and it's all hidden. But then once such an index comes out, a little bit more transparency will be forced upon the market, which is a good thing. And it's just a matter of time before, for example, if REIT starts using as a benchmark and REIT is a regulated product, then a regulator can say, these are the parameters and this data has to be public. And that will force some
Also, nobody's building same spec. The other problem is you can't compare spec. While we grade them, grade A, grade B, grade C, whatever, every product is different. Every developer's enhancing their experience of what they're delivering in the next project to make that the next new benchmark, right? So when you benchmark product, say on Banata Road or in CBD or in Gurgaon or Mumbai, BKC, etc. I mean, if you see every developer over the last 3 years, 5 years, 10 years has dramatically enhanced the entire experience, the quality. Cost of construction's gone up. So it's great to have an index to benchmark. It's a good guiding factor. But there are so many little things. And there are, if it's a build to suit, then it's specific to a client's need. There is the quantity of glass you're doing, the floor loading, costs are going up. So rents will depend on that. So there is a lot of customization in our business one office.
So the thing is, again, I'm just focusing on the bigger picture. The first version that we have is the best kind of a take on what we have. It's easy for them from the modeling perspective to, let's say, downweight a build to suit pricing, because, as you said, it can be. No, I understand. But what I'm saying is that in order to be a representative index, we could kind of alter the weights that we place on build to suit versus a pure transactional, a non-customized index transaction. But what I want to focus not on the things that that could be wrong. I mean, given what we have, I would say the big things are whether your grade A, what qualifies as grade A, is it if there is a reasonable consensus, then we are good to go. Our methodology, if there is nothing major, it's good to go. And in terms of the representation and the way we are built up, and I think Saudeep mentioned, but really this is the power of this methodology, which is if I have 5 transactions in one locality and I have, let's say, 100 active leases which are ongoing, we actually create a market price for all the 105 leases in that locality. 5 being actual transactions and the 100 being hypothetical transactions based on what information we have gleaned from the data. And that gives us a power to go after localities where there are no transactions, go after time periods when there are, and I think this is really the power. And also it discounts, for example, if those 5 transactions are not representative. It does not skew the localities index, right? Because you're only giving that kind of weight. So I think that's the power of this approach. And it is as good as the data that goes in. So right now, I believe CRE-Matrix is used a lot. And we would be very happy to take suggestions on how to improve the quality of the input data. And of course, it's a work in progress. It will continuously evolve. But as long as we agree on some of the basic things, it's a good step, is what I'm thinking.
No, absolutely. I mean, we are a data company as well. There is no perfect data in this world, right? You cannot get absolute perfect data at all, right? Even if you go on a Google map, it keeps adding +7, +5, the traffic is bad. So I think this is a great start, right? I mean, there is no way you can get a perfect index. For an occupier perspective, we've been using CRE-Matrix, early adopters. We've used those as indications. I think Abhishek has been meeting many occupants like us as well and calling out those standard deficiencies as we improve. It's not, it's a standard errors, probably because of lag in data or the things. I think also talked about with Pranav, we're working with him very closely on releasing a data, then calibrating it over the previous 2 quarters, because sometimes the data lag is there and then the previous data gets corrected. We haven't seen a big change in those data. There's been nothing that windfall change has contributed it. And like Ram said, perspective of grading today, that's what the bucketing has, this 10 points or 12 points that we have. Google might have a different stack ranking, right? And we might not even touch a strata building with a long pole, right? It's a personal thing. It doesn't mean that a strata building is bad. That's how people work. It's a model that's proven in India. There are good asset managers, good developers who manage that. But these are the internal things that you can't go to personalization and find out which works, because we call something grade A plus premium. And that's what we touch as a building. We don't even touch grade A plus that they call themselves with, because we look at sustainability factors, meeting all our 20 sustainability points as a grade A plus building, right? So it's going to be very difficult, but I think it's a very good start. Very good start. And I think more inputs with this indices, and the more we use it and more we give feedback to CRE-Matrix, I think that's how it's going to improve. Today, even for me, I get reports from 5 IPCs, 5 different data, right? I mean, it's not the same. So this will be the 6th one, but at least it will be a neutral one and this can be now calibrated with others. And of course, they have wealth of data, like IPCs, like RAM has wealth of data, and we can calibrate some of these GCCs data we went through was quite different to what we get from them. And we in the market also know what kind of GCC data happens. I think we can calibrate those data, and that's why we're all here, right? I mean, it's not to find fault with the indices or thing. I think it's a great start. I mean, we're really loving it.
Thank you, Ganesh.
Just to add, I mean, great start, great work. To add to the comments that we've all discussed, there is layers of variability which we may want to work on because, for example, grade A plus occupancy of the quality of tenant also determines price. Whether you're doing a build to suit asset, you're leasing it when the building's actually ready. You've transacted it 2 years ago. The transaction price at that point in time doesn't change just because the lease registered 2 years later. That value may not be a representative of the marketplace. How do you calibrate all of these things? Because if you're giving predictive sites into how the rent is going to move, and at some point in time, you're going to give a definitive trajectory to index, then these things will start to matter. While you may calibrate it to carpet area, then you don't have a problem with super built up, saleable, chargeable. It's a carpet rent. Nobody wants to do that because it balloons the rent up. So everyone goes on buffering up the saleable area to keep the headline number. We have to change that as an attitude of sub-dollar economy, dollar rent. We have to move up. So we will move up as grade A gets appreciated. You're doing 60 million square feet a year of transactions that are captured. Out of that, I think 80 to 90% is grade A now going forward. And all of this is happening in the tech space. So calibrating the occupier, calibrating for volume, and making sure it's time adjusted because your build to suits are happening. All of these things will help kind of give better, sharper spotlight on the numbers.
Thanks, Vinod. I think the first two is easier because we do have the lease data. We have information on the lease. The third part, which is the time, calibrating time, as I said, we'll have always an issue. I'd be happy to hear suggestions on how to improve that.
So if I may just add one point regarding some of the comments, this attributes thing. So when I was talking about it, I showed these different components, right? So what you are talking about, let's say there is a tenant is really better than others. We can easily add that in the part where we remove the effect of things that we know is going to add premium anyway. So that part is really easy for us to do. And that's, I think, what Venki is highlighting. Yeah.
Yeah, sure.
Yeah.
So I have a Vineet here, Professor Venki.
Yeah, hi, Vinod.
I just have a general observation. See, I'm sure you already have the data available with you. What can really help us, businesses, to know the average size of office being leased? So that, when we start designing an office in a particular area, we know as to what footprint to create. I'll give you a classic live example of what happened in Gift City. Some of us went horribly wrong because we built a large format office space, whereas the requirement was office spaces for just 1,000, 2,000 square feet. So I'm sure you have the data already available with you. If that can help further improve this index, it would be great.
See, the only problem with that, Vineet, is that we want to focus this as a price index. There is a whole lot of analytics on a particular transaction, which I'm assuming people like CRE-Matrix makes money out of that. So, I mean, that's their business model, right? So I think we want to not get into the space where we become like a consultant. So what we are saying is, look, here are all the transactions. How do we synthesize this and get to a one number, like a Nifty 50 index, which takes into account all the attributes that you mentioned, and as best as we can, it captures the effect of valuation in that particular time period. I think at that point, I would say academic involvement should stop. Beyond that, I think people will take it and then build upon it. And so that's would be my answer to that. I think we should take a few more questions collectively. Yeah.
Thank you, guys. I think this is a game changer, not just for the big developers, but for emerging developers as well when they're looking at any land and trying to figure out what the rental price is going to be. My question would be was there any factoring of some of the latest infrastructural developments like the metro stations and things like that into a lot of these rental pricing so that we can comfortably and confidently quote a better rental price when we are going
Shaudeep, hold on. We'll take a few more questions and then collectively answer. I think Shaudeep will answer that question. Yeah. Yeah.
I had a question in the meantime while
Yeah,
the mic reaches
yeah,
them.
Anand.
By the way, fascinating discussion. I'm learning a lot in this short period of time. So many experts here. One question I had was, what is the assurance process around the calculation of this index? Is IIM Bangalore doing the job of actually, I sense that there are a lot of subjective or quasi-subjective calls that need to be taken maybe in terms of whether it's commercial, grade A plus, etc. One of the issues that have happened with research reports or with other indices is credibility. So what is the genesis? What is the foundation that you have for improving the credibility? That
I'll answer that question. We'll take a few more questions and then we'll get to those. Yeah.
So I am from Pune actually. So seeing Pune was at the top of the list was really exciting for me. Having said that, for the Pune market, we see that it's extremely localized to the east and the west of the city because the center is extremely concentrated and overdeveloped. Having said that, the infrastructure that is happening through the city with metro is great, but around the city, on the outskirts, uh, sorry, on the outskirts, we're really struggling to find a good pricing index and a way to kind of estimate whether we should bring commercial spaces and what kind of commercial spaces and how we should price it. Especially because infrastructure on the outside, you can't really, the timeline is very skewed as to when it's going to come up and how can we factor that in these non-localized markets.
Will take care of that, especially this particular problem where, in fact, yeah. So I think Shaudeep will address. So we'll take one or two more questions. I think yeah.
Hi, Arvind. Since your whole index is based on the effective rental, I have sort of a technical question to ask. You're looking at lease deeds and parsing the data from that, right? So the relationship between the various commercial terms that are captured in the lease deed would really be the base of your whole thing. So just wanted to know how you're treating some of the relationship between the elements of the lease deed. I'll give you an example. Rent-free period, which you sort of touched upon. Now, the rent-free period's relationship to, say, a rent commencement date and a lease commencement date and a handover date will really affect how much rental the developer makes within the lock-in period. So are you actually getting into that level of detail of the lease deed to actually figure out when is the lease commencement date with respect to the rent-free period and when is the lock-in ending? So if you could shed some light on that.
CRE-Matrix, we'll take one last question.
Yeah,
Then we'll answer
the
that.
fundamental thing is price is a factor of demand and supply. Now, there's going to be a market where the demands have gone up and the prices have gone up. And suddenly, all the developers is going to start putting up supply over there. And you'll get a period which might be a temporary or a slightly longer term. How would you adjust your predictability in terms of the pricing for that particular period, which cannot be a CAGR, sort of a growth on a year on year? So would your index will also provide a sort of a predictiveness in terms of for the next quarter, 1 year, 2 years going forward based on both supply and of course all the other factors you've already talked about?
So let me first address, I think we'll have to take these questions offline.
I think one last question,
Sure.
because thank you for the rental index and basis data. I have one question for CRE-Matrix, particularly that the data that you're relying on are registered lease deeds. Consider 2019 and now. A lot of lease deeds registered then, having a 10-year lease period, are in the system right now. But actually on the ground, post-COVID or during the COVID period, a lot of these registered lease deeds have undergone a lot of changes. And you know what are those changes are. Well, I would not like to spell it out because I would like to speak about the positive trends here. So what kind of discounting factor have you considered? Because those lease deeds that have undergone changes wouldn't be available with the government authorities, maybe sitting with the developers, or maybe the occupiers would know that. Did you take a discounting factor when you arrived at this rental index? Thank you.
So let me address some high-level questions, and then I think both Shaudeep and Pranav will. On the data integrity, on the whole project integrity, so the separation between data and analysis is very clear. We took the data, we did a lot of what I call common sense checks, and the data, whether it's grade A was defined properly, all those things, we relied on the vendor's data. And based on our conversations with a lot of users across investors, developer category, we felt a little bit confident about the quality of the data that came in. After that, they don't have any say on anything else that happened post from that data to the index. The entire process is managed, owned, and operated by IIMB. So the input data came from them. We gave them an index, and then they looked at whether the index made sense. And then we actually had a small sort of Zoom call with a bunch of stakeholders to kind of go through the process, and we got a little bit of confidence. The problem in this space is that it's not like a stock market data, where the data, incoming data is regulated, where an exchange, which is a regulated entity, provides the data. So here there is a subjectivity in the data space itself. So in that respect, I would feel, in fact, one of the objectives for me in this forum is to bring it out, to say if there are better quality data or if we can improve this data, more than happy. In fact, part of this process, Abhishek and I, we will have to do this, to bring some of the input data out to people to vet it and validate it that this makes sense. But the process beyond that is completely managed by us, and they don't have any say. So in that way, we are protecting the integrity of the outputs. Just one question on her point, and then we will address the rest. I think the whole point of this index, the methodology itself, is that if there is an active lease and that active lease is now being, let's say there is some negotiation, COVID happened and things like that, it would not really affect the way we look at the, let's say in 2022 or 21, when in the middle of COVID, any transaction that happened at that point in time will determine the value of those active leases as well. So what prices they were stuck at the time of the origination of the lease is less relevant. So what we are doing is that given what transactions happen in a particular locality at a particular point, will have a big impact on all the active leases in that space. And therefore we will calibrate it accordingly. And which is why I'm saying, if we didn't do that, a lot of this would be a problem, right? Then you would see a sudden change. So that is the whole advantage of this approach. So now I will leave it to these guys too.
Yeah. So first, to address the question of how registered leases, re-registered leases happen. So many leases get re-registered as well. And in those cases, when we identify that there is a trend during COVID period when occupiers left, we have given a larger weightage to those transactions which were less in number, but depicting a better picture of the market. So I know leases never got re-registered again, a large proportion, but then those levers are there in the model to take care of such factors. The second question which sir mentioned was that, what is the reliability? Sure. Yes. So when all these factors come in, rent-free period, even area leased, for example, is if a particular micro market is looking at only a few transactions which are very high in terms of chargeable area, then we have normalized that as well, because usually those would attract lower rents. Now, if we know that this area usually has 60,000 square feet transactions, and we have seen most of the transactions happening in the 2 lakh square feet space, then we have taken a discount of that as well, right? So area leased, lease term, these things are getting normalized in our model. So if someone is doing a 10-year lease versus average of that micro market is 5 years, then we are adjusting that 10-year lease as well.
Yeah, so to address this couple of questions regarding Pune's different locations and essentially kind of same question you asked. So the model first, let's put it this way, first removes the effects of amenity level premiums. Then whatever is remaining, that can be understood as the average pattern of the pricing. But then we take into account the spatial relationship, right? So in that way, even if there are no transactions happening, I think you were mentioning central part, no transaction is happening, but other places are there. As long as there are few transactions happening in the city, we will consider, let's say, a continuous scaling of that one throughout the city. So we do it in both ways, both in terms of time and space. And that's actually also connecting back to the COVID trend thing. If you look at all of the plots that we have, we never specifically put any discounting factor for COVID, but you will see that the index shows a drop. So it has been automatically captured by the model itself. So it will provide predictions well for locations for which we don't see anything based on whatever transactions we have. And we have done the problem of out of sample predictions as well. So we can do it, but obviously the further we want to go in time, the lesser will be the reliability of the predictions.
The idea is not to do a forecasting. That is up to you to do this. So our focus is creating an index which captures the pricing at that point in time. Taking it forward is what the analysts will do, using the whatever the price paths that the index have taken. Because then it makes no sense, right? Because then we are putting our color on how the price path will go, and that's not my job.
So actually, even if we are talking about forecasting, we will not forecast the index. We will forecast the pricing pattern. Let's say you propose to have a building with a particular characteristics in an area, we can forecast what will be the average price for it. How it would impact the index, that will be done later on.
I think we should stop now in the interest of time.
Sir, I just take one, I mean, you had a question on the reliability of everything. So we at CRE-Matrix, we are scanning all these deeds which run into 500 pages at times. And we love it, though it's a cost for us. But the more disclosures are there in the lease transaction deed itself. For example, there was a lease which had 100 pages on sustainability. We captured every parameter and have quantified that building to ensure that the rentals reflect that part. So the more disclosures, as you mentioned in your discussion as well, the more disclosures are there in the lease transaction, the better for us, and the index quality improves.
Thank you, guys. More than happy to answer more questions. We are available offline as well. We'll take a 10-minute break. If you guys can have your coffee and tea fast, we'll come back for the panel. Thank you. Hey, we are quite behind on time. I don't want to starve you. So please, let's get started as quickly as possible. We're going to have two very interesting panels followed by a freewheeling conversation. So let's get quickly settled in. Just wanted to introduce Professor Prashant, who will be the moderator of this panel. So the layout of this particular part of the event is to bring out some of the opportunities and challenges in the Indian office real estate space. So what we thought is we will break it up into two natural groups. One is the owner-operator group, which is what we're going to have first, and then we will follow it up with the occupier perspective. So I just want to introduce Professor Prashant, and then he will take it over. Professor Prashant is a good friend. No. So Professor Prashant is a good friend from IIM Ahmedabad. As I mentioned earlier, when we started a decade back, nobody was doing anything on real estate. Now we have two top B schools which are focusing on real estate. Both of us are doing work, and in fact, we are collaborating as well. So in that respect, I'm extremely happy to have another person, a shoulder to cry on whenever things are not working out well. But with that, Prashant, all up to you.
Thank you, Venki. Congratulations again for this wonderful initiative on CPRI, the Commercial Property Rental Index. I'm reminded of Jagjit Singh. He said, "Der lagi aane mein tumko, shukar hai fir bhi aaye to." We have been awaiting this index for a very long time. Earlier, Abhishek and some other people also talked about how the office markets in India are expanding. Even if we keep our GDP growth rate at the same pace, every 7.5 years, our GDP is going to double. But if the economy has to do something more special than that, then this doubling will happen even faster. And office space is closely tied with overall economy. If the GDP is growing, you need more people working, more blue-collar and white-collar jobs coming in. And hence, when IIM Bangalore comes up with a rental index, it's not something that only affects real estate sector. It could be a signal for an overall economy. This is the first step where we are talking about rental rate index. And I hope that going forward, this will spur creation of more indices here. So ladies and gentlemen, without much ado, we have a constellation of people from this very special space on commercial real estate. I'll quickly introduce, if you could just wave your hand. We have Jaggi Marwaha. He's the CEO of office at Prestige Construction. We have Nirupa Shankar, Joint MD at Brigade Group. We have Vinod Rohira. He's the MD and CEO of commercial real estate at K. Raheja. Our main focus for the discussion today would surround the idea of the rental index that we just witnessed being launched, but also how else could this index pan into, and what is it that could be, that this ecosystem could add to enhance the data analytics part of it. So Vinod, I'll start with you. K. Raheja has been, one of the major players in office space. You have a REIT as well. And we have seen a lot of change in how office markets have evolved. The US market is still trying to come out of the shock of COVID-19. Asia Pacific markets have taken a lead, but it's very heterogeneous in nature. And in general, the profile of the tenants and their preferences in recent years have changed drastically, and you have seen it very closely. How do you think this space is going to evolve in the next 5 or 10 years?
I think very valid question. Firstly, for India, the way the journey has been for commercial real estate is, the last 20 years, we've seen 700 odd million square feet get built. 400-500 of that got it right in some shape or form. 200-300 fell away. We've learned a lot of lessons, what to do, what not to do. We've also made mistakes, hopefully not repeated them. But what we've learned from all of this is, I think every 5 years, the consumer dynamic has completely changed. Who my customer is, I cannot predict 5 years forward. But when you're building an asset, it takes you now 5 years to build it. By the time it's ready, it's obsolete in some shape or form, right? And the consumer by then, your building is going to be 60, 70 years in your lifespan, unless rents go to $10 very quickly and we break buildings down and rebuild them out if we own them. But otherwise, you're building for the 50, 60, 70-year period.
Absolutely.
Your consumer is no longer the CRE alone or the business decision maker, etc. It's the lowest level of employee walking in and out of your office buildings. He's your customer, and that's churning 30%. So the next guy that comes in doesn't have any legacy with you 2 years down the road, right? The entire ecosystem needs to kind of work to retain that talent pool that's dramatically changing. And then the cycle of how tech has evolved, because 90% of commercial real estate really in India is still tech. Globally, 90% is domestic real estate. So we will see domestic demand, if you call it the economy to ride on to 8, 9, 10 trillion. I think 40% of the market share will be domestic companies. That will be a big game changer for demand. They want to rub shoulders with the right brands, which are top brands of the world, want to pay the top rents, want to be in the top buildings for the top talent. And you're seeing that, and that's going to change really fast. So we are not mapping that because we have NASSCOM that maps GCC, which is no longer GCC, is actually GPS. Every business system is now in India. It's not certain activities that are coming to India. So in that cycle of influence, we're only so radar focused on 400 million square feet in the next 5 years. GCC will take it. Growth is going to be XYZ. Nobody's mapping domestic demand. And 400 million grade is not getting built. But the challenge you're facing is, if markets like 200 million in Bangalore, you will have a 10% churn. Some part of that is going to fall away because you will never release that back. So you're constantly upgrading assets. You're constantly creating experiences. You're constantly changing asset management dynamic. That's really going to make a difference. So if you ask me 5 years forward, by the time I designed from my last building to the new building, I think the product's already changing. So we don't have that answer. If you get 8 or 10 things right, I think you're in the right quadrant. Why? Because you have only a handful of people building grade A. The demand's always going to be there. So you're never having to play catch up. But you will have to be extremely careful about what you build and far more careful about how you service it than what you build.
And especially in today's world, we are really not a global village when it comes to commercial real estate. I mean, what is happening in the US is very different from what you observe here in India. And until 2 decades ago, there were few sophisticated players like you who had this in-depth understanding of how the markets are evolving. And now with the indices like this, I think we need more indigenous commercial real estate strategy. And this, of course, will come from leaders like you. Nirupa, I'll switch to you. You have a background in real estate and hospitality from Cornell. I was looking your profile up. With this new shift from traditional offices to work from home or flexible offices, how are you responding to these changes in general? I mean, what is your strategy?
Yeah, I think, like you said, real estate is, or commercial real estate is doing really well right now, despite, especially in India and Asia, which is contrary to what's happening in global markets, whether you look at the US or Europe or Australia. So in Asia and within that, India is definitely a bright spark. Of course, 3 years ago or 4 years ago, we were all on panels together where the discussion was how office is dead. There is no future of office. And now we're talking about building, I don't know how many million square feet. But the important thing is that clients are now saying, or occupiers are now saying, of course, it was first office is dead and only work from home. Then it became return to office. And now, as you know, it's the hybrid system where a lot of the occupiers want to do a 3-day work week. So the important thing is people are coming to work not to just work on their email, right? People are now coming into work to collaborate, because what they found was in the last 3-4 years when, or rather 2 years when there was a lot of work from home, that collaboration declined, number of patents registered declined. So they understood that, okay, if you want to keep the culture alive and business alive, you need to be in office. So what builders like us need to do, especially in the way we design our buildings, is to create more collaborative spaces, whether that's more open spaces and parks for people to get their creative juices flowing. In the design of our offices, how do you get more natural sunlight? How do you create, in the fit outs of the space, how do you create more meeting rooms, more collaborative spaces, so that people are not coming just to work on their email? And that is the similar theme that I've heard from most occupiers. If they want to work on emails, they can do it from home. But if they're coming to office in this hybrid nature, then we want more collaborative spaces. So a lot more, I would say, in the interiors is where we can make the change, because sometimes when you've already built the building, very hard to make civil sort of changes there to the structure. So I think that's the main thing. And I would say developers like us are actually, like Vinod mentioned, we have to service the clients well, because now it's all about the experience. So we are having to become event managers of sort, we have an events team, we have a marketing team, we have an F&B team focused on what food would the occupier like today, what kind of music festival or comedy show can we do to keep them engaged. So we are racking our brains in terms of what we can do to do more
Correct.
employee engagement
That
activities.
animal has come out of the retail space. Now even office owners and operators have to think about it.
So the hospitality and the retail and every background has to come into sync with office now.
I see. This also is a cue, because both Vinod and Nirupa have subtly talked about the design aspect of real estate. I mean, traditionally, real estate has been in the domain of finance and economics. And now we see how important design has become. I was talking to my students at IIM Ahmedabad. You would imagine these, engineers and chartered accountants mostly would be very transactional in their association with the campus. And they had a lot of suggestion about how to make these spaces collaborative. They had opinions on the design and why certain aspects of design are more collaborative and why others are not as collaborative. So this perhaps could be one next step. A lot of new research is coming using deep learning, where design is being quantified. And if that could be a part of the grading that you do, because the traditional grading, US style grading of offices is perhaps getting obsolete. And we need to come up with newer dimensions of that. So Jaggi, let's build on that. I mean, you have been witnessing this trend for a while, work from home, back to office. But in a way, these are two opposing forces, type 1 versus type 2 that we were talking about earlier. Do you feel that the effects of COVID have gone, or do you think that the ghost continues to affect our thought process? Is this debate here to stay, or do you think we have taken a side as a market?
I think COVID is gone, long ago. And I think from up, the way we look at office markets today is we are only ramping up. 2019 was a record year for us. As an industry, we were at about 55 million. We are now touching 70 million. So that itself tells you exactly where we are. But I think the nature of the business has changed. Like Vinod rightly said, I think to be relevant in this industry is the most important. Relevance of buildings, relevance of your clients, relevance of understanding the client's needs, like Nirupa also mentioned. I think we also have now today a marketing team that concentrates on the next walkathon or the next cyclothon or the next blood donation camp. I think that was a big learning for us to understand that we are not just landlords or developers owning real estate, but also curating experiences. And I think we are slowly stepping into the whole gamut of also experiential leasing, when I would say. We were just filling up an RFP where a very large client wants to take space from us, but they said, from tea, coffee, biscuits, you need to do everything for us, including tissue paper and toilet paper.
That was for the developer.
With the developer. So, I think the rules of the game are changing. So I think we will see that it's a holistic thing. People understand and appreciate that, sorry, but not for the co-working industry who's actually looking at managed spaces and create leverage between the developer and the occupier. I think it's time for even developers to do a holistic solution, because it just cuts the flab in terms of doing a direct transaction. and more importantly, understanding what the occupier needs. So it goes back to design, philosophy, relevance, experiential leasing, sustainability. It's a whole game that I think developers will. And like Vinod said, in every office market today in India, especially Professor Venki was saying that there are only 6 grade A cities. If you take the grade A 6 cities, you can find about 5 to 6 serious office players in every market. You don't find the 7th and 8th and 10th player. On one side, it's a big opportunity for people who want to come, but also on the other side, it's a added responsibility to shoulder that you want to take grade A office space to a new level. So it's a great, interesting time. I think between the 3 of us here, we ourselves are looking at about almost 100 million square feet of development in the next 3 to 5 years. So I think great times, but responsibility, compliance in the forefront, sustainability, and more importantly, experiential.
Fantastic. So talking about the new solutions that you referred to, Nirupa, at Prestige, you have been working with a lot of prop techs.
Brigade.
Brigade, my bad. Two stalwarts on one side, of course I'll be confused. So what are the new trends? What kind of new solutions that you find most fascinating in the prop tech space?
Yeah, so I think, when we started Brigade Reap about 7 years ago, honestly, I was looking for a solution. I was looking for something to magically come and solve waterproofing, for instance, because I would say if you solve for waterproofing and leakage issues, it solves like 90% of all customer complaints. But I think as we went along this journey, we've understood that there's no one solution that can fix, there's no one path-breaking solution. A lot of technologies have come in to solve a small piece of the jigsaw puzzle. Today, of course, what is the most in vogue, I would say, is sustainability. And without us having to go look, about 30% of the portfolios in sustainability. So what some of the solutions are, basic things like water management, energy management, creating a sewage treatment plant that doesn't require electricity or chemicals, maybe green solutions. So there are consulting companies within the portfolio that actually will help you build a green building, whether it's LEED or IGBC. So I think what we're looking to do is create like a portfolio of sustainable solutions that we can hand to occupiers and say, hey, here is this one-stop shop. Because right now everything is piecemeal. You have to go to multiple different agencies or companies to get, for contactless access, a different agency, for sensors for your lights, a different agency. So what we're trying to do is create a portfolio of companies at a service level to say, again, because we want to provide that extra level of service and that experience to give to an occupier and say, hey, these are the 10 companies you can use from a sustainability perspective to make your operations well certified or green certified.
Yeah,
because
so,
that
Nirupa, call me a typical capitalist. But what would be the motivation of these people to go for these solutions? Would it be enhancement of rental rate or enhancement in occupancy? Why would they, what would be the uptake?
So a lot of this is driven from the occupier, right? And everybody, most of the occupiers are your Fortune, not maybe your Fortune 2000 companies. And the top down of that from ESG goals that they would have coming from the US or Canada or Europe, they all have to be in green buildings. They're all trying to offset their carbon footprint. And today, maybe we don't have a carbon tax yet, but I don't see it being too distant in the future.
Yeah.
And another thing is you can, for a builder like us, getting green loans, it is coming in vogue now. And banks are able to provide slightly more cost-effective green loans for green buildings. So there's a lot of talk on
reasons
greening.
for that, because a lot of recent research has suggested that green buildings have less volatile cash flows. It's perhaps driven by the phenomenon that you described, that tenants who have SDG goals in the headquartered nations are, really interested in retaining their tenancy with green buildings, and they negotiate less. They're less rent sensitive. So in general, you tend to see, this is what the research has shown. Do you agree?
I think green buildings, for at least, like I said, the more established occupiers, it's a given. Unless you're a LEED, or I prefer IGBC only because it's more Indian centric. LEED is a very US centric kind of rating system, but I think IGBC is more relevant to the Indian market. So unless you're IGBC Platinum or LEED Gold minimum, you're not going to even get qualified for half the RFPs in the market. So it is essential right now. And I think what you will get a premium for is the overall structure and the overall ambience of the building, and of course the quality of the
Okay.
product.
So, Vinod, I can't help it. I have to ask you this question. I mean, we have been all about data and analytics here. I'm aware that big developers like you do use data extensively. How much of that use would be geared towards analytics? I mean, you don't have to spill the beans on your trade secrets, but in general, what is the role of data analytics that you see today? And how do you see it will evolve in the future in how, players like you come to decisions?
To do data analytics, you first need legible data. That itself was not there, right? And micro market data is very different from macro, right? So for us, unfortunately, in a developing country like ours, you cannot go with historical data. The data set you will build in the next 5 years is going to be 3 times of what you built in the last 25 years. And if you depend on historic data sets, you're already obsolete. There's a far louder cry now for analytics, whether it's in construction technology, whether it's in speed of information, because just to give you our example, we built 25 or 30 odd million square feet in 20 years. We're building 25 million square feet that has to be delivered in 3 to 5 years. Now, you made mistakes over 25 years and you corrected them. If you make mistakes in 5 years, you've lost 25 million square feet worth of opportunity, right?
And you don't know what to do with it.
Exactly. And you can't do it the way you did it with Microsoft Excel and this, that, and the other. You just can't execute. So we are constantly working parallelly with experts to change the dynamic of and the processes, bringing layers of technology in. There is no solution, like she said. We are finding an evolutionary pattern to make sure we get certain layers of technology. A simple thing like BIM, for example. I mean, BIM has been there for 10 years. But when you start looking at the BIM drawing, it's very basic. What BIM can really do, we're not even using 10% of BIM, right? Correct. So our target for the next 1.5 years to reach 90% of capacity that BIM can offer you, which means the way everyone thinks in the organization has to change. BIM was just a tick mark. It moved to a serious mark. Now it is, the BIM has to throw out exactly what is built. We have done as built, converted old BIM to new BIM, seen the difference. It's day and night, right? So there is, and now BIM can be used for interiors. Okay, so when you do BOQs for interiors, if you see a BOQ contract, it's so humongous and it's all froth. If you put it generated out of BIM, it's dramatically different. We're not allowing for any interior execution because that comes last minute and you're saying you have to finish it in 3 months. But if you don't have the right data from BIM, you'll make a mess of it.
Correct.
So technology is needed, desperate need for technology. We are trying out item after item. Hopefully we'll get somewhere there. By then it'll be obsolete. So it's a constant process, but you can't do without it.
We have to catch up as a civilization. Jaggi, on that note, a lot of this technology innovation is coming from PropTech firms. And a lot of them are in, A or B series of funding. Many of them will survive. Many of them may not survive. But a lot of them have made it to the actual facilities when it comes to, let's say, commercial office buildings. What are some of the most interesting technological improvements you have witnessed or you would like to adopt, which are ready to use right now?
So I think very interesting that you asked this question. About 5 years ago, I still remember when I was in my erstwhile organization, JLL, we did a tech startup event. We had invited over 200 young entrepreneurs to come and participate in a something like where people could come and present their ideas, and we saw some brilliant ideas, and some of them have actually gone in the last 5 years and evolved themselves into getting adapted to our organizations and other many companies. Simple small thing like I was looking at a company about 3 years ago that and this is Nirupa invests also in this business, drones coming and cleaning facades, and drones and set up the entire system of facade cleaning today. It's automated. It's a very, first of all, a risky job. Second, we don't have the expertise. And then when you give it to a third party to manage it, they don't manage it with the best of EHS and safety standards, and human life is at risk. So these kind of solutions have come. Of course, a lot of stuff is happening in the experiential platform today with the, community gated experiences in office today. So one app for everybody to come and, utilize something like everybody's creating a Bonvoy Marriott kind of an app where everybody gets involved in the whole embedded system, right from a visitor entry to faceless recognition and all of that. So I think while technology is coming very in the forefront, thanks to us working very closely with companies like Google and all of them, we see technology being utilized in our own buildings. So it's a matter of, I would say, not a choice anymore. It's you are in the ecosystem. You're in the ecosystem, and with a small thing like we don't print any more brochures in our gallery when we launch a product. We just do a QR code, one card, and that's about it. You save paper, you're sustainable, and all of that. So I think at every level of building operations, IoT systems in terms of how we manage BMS today, completely integrated on a chat box kind of a thing. So occupiers getting access to it. So I think the sky's the limit when you can adapt technology, but only one area where we still haven't been able to crack the physical brick mortar industry, where we still find it very tough to replace labor. And I think that's one part of the whole ecosystem that we really need to work together.
Yeah, but that's a controversial standpoint. Do we need to replace labor? So given the need for employment in India, but that's a debate for another day. You talked about BMS and BIM. How far, Jaggi, are we from Mission Impossible kind of environment, like
You'll be
real time?
surprised. So there are about 4 or 5 big global giants who are working on IoT data today. It's actually like what you mentioned, the data coming in and how you manage the data. So garbage in, garbage out, that is all. IoT today, building management system, we always say that, you can control elevators, HVAC systems, water, everything remotely. And I think if you don't design your building to adapt to a future technology that works on a SaaS or an IoT system, I think you're building, like Vinod rightly said, you're not building for the future. You're not being able to build resilient buildings. And if you don't build relevant building, you'll be out of business. It's a matter of compulsion and being in business.
Correct. Ladies and gentlemen, we have a wonderful, panel of speakers. The thing is, we don't have much time left. So, Jaggi, I will start with you. If all three of you need a few seconds to munch over it, how in your respective businesses, you see yourselves exploiting this rental index? How do you, this rental index? Please take your few seconds.
Okay, first of all, like you rightly said, Derai Durustai, it's extremely important. It's a great start. And I think with data coming in from credible organizations, we also follow CRE a lot. We use them a lot. But I think with the stamp that IIM brings in terms of credibility, and professors really worked hard on it, it's a great initiative. And I think we can only leapfrog several steps, notches higher to ensure that this becomes the only thing for people who are coming into this industry to take this as a benchmark, move forward, best practices. My only thing is that if you can make it almost like a live kind of thing, I'm sure it's the next level. I'm sorry, I'm setting you a benchmark, but it'll be the most fantastic thing. Can you imagine you sitting on a app on your phone which tells you exactly what the occupancy vacancy levels are today in which micro market across India? I think that's the day that you will be able to do it.
I think in hotels you do have solutions like that.
Share data a lot.
Yeah.
Unfortunately,
Offices,
the
we are
hotel,
yet to-
comp set data that they talk about, it's very transparent. Yeah.
Yeah, hotel data is also a quarter old. So I think, first of all, congratulations to Professor Venki, the whole IIM team, and Abhishek and his team, and the other Abhishek as well. We've been using CRE-Matrix for a very long time. I always use CRE-Matrix before going to a negotiation, so I know what my competitors are charging and how we can sort of better that deal. But really happy to see you guys lead this whole initiative. I think it's very welcome because it may not be fully utilized by builders more so than occupiers. Occupiers would like to use it, and I think it will make the whole so-called opaque real estate industry more transparent. And I think it's good because they will be able to assess the important factors like, clear title, is this building, have they adhered to all the building bylaws? Those are all very important things when making a decision and, impacting the cost of, or the cost of building. So I think it's very good, especially for the people who are trying to do this business in an honest and in the right way. I think it's good to make the whole system transparent, and I hope it'll help all the occupiers as well.
Thanks, Rupa.
So firstly, congratulations, and I do want to repeat, it's great start. What will also help, besides all the points that have been made, is if you get stalwarts and partners to endorse what you're doing instead of doing it in isolation. Like, for example, credible agencies like JLL, CBRE, all of these guys who know the market inside out. I pick on associations and larger bodies that can sit together and tell you what can get accepted. You'll straight get a fillip on all of this, because otherwise you'll be struggling to fight individual thoughts. So if you put all of these guys together, you may filter, use multiple agencies to give you data, because at the end of the day, you need right data for you to be able to run the right index. And if that happens, then probably no one's going to question this. Everyone's going to start accepting it as a norm over a period of time, because they've taken ownership for information. That's the only way the journey can kind of quickly ramp up to a credible, true value index model, which globally we see. I mean, if you want to go to the US and you want to buy a home, you check on the index, you say, okay, what's the rating of the school? The school rating is 5. So the housing rating is X because of the infra, transport, safety, health and care, all of that, hospital. In like 10 minutes, you know in which micro market, which home, what's the price. You can't do that in India, right? Of course, residential is far away. I'm saying at least you can do it for the commercial space and come to that level of detail.
Yes, it requires a level of higher degree of collaboration, where it has to come from an asset micro level to at least a meso level at an urban level. Ladies and gentlemen, I think we can wrap it up here. If you have any questions for our panelists, we can take a couple of them. Yes, please.
Vinod, I'll throw it at you or anyone. I think inflation is a friend of real estate. Asset prices have moved up tremendously. I can see it. I come from the infrastructure space, but rentals have not moved up. You did mention about markets. You mentioned about, IGBC buildings, SDG. We're going through the same thing, but, so what are your thoughts on that?
So if I'll take this, inflation weirdly is our best friend, right? Three things happen with that. One is it creates the trajectory in the future for prices to go up. Second is keeps competition away, because not too many people run behind it, because specifically in the commercial real estate piece, three things have happened. One is, like you said, cost has gone up. Other is densities have gone up dramatically in the last 5 years. So each of these markets that we talk about, leaving aside Bangalore, which has not pushed itself out into the FSI going to crazy numbers because of the multiple airports you have in every 5-kilometer radius, puts your height down. But I mean, if I can tell you, for Pune, you were building on a 2 FSI model 5 years ago. So if you had a 2-acre piece of land, you build 2 lakh square feet. Today, you can build 1 million square feet on that. You need 5 times more equity, 5 times more capital, 2 years more to build, vacancy costs, inflation costs. It just kills away the speculative supply dynamic. And then you start getting fatigued, and half the times you create strata. So that's what creates the opportunity. You've created, inflation is an entry barrier. It's as simple as that. Going forward, just to end with, definitely with the quality of infra that comes. So it's not just the building. It has to be a cumulative macro, micro combined. If the infra is right, you build right, you will get the customer who's willing to pay you right, because the value chain of services is going up. That's your silver lining. And with growth, demand is pushing up, rents are pushing up.
So because we have lack of time, so the panelists can just answer yes and no. So Jaggi, you mentioned that between three of you, you're almost 25% of the market, 100 million square feet in the next 3 to 5 years. And Vinod mentioned that credibility of data is the prime responsibility of the industry, and you being 25% of the industry. So, and Nirupa mentioned something about credibility and collaboration and all those things. So, in interest of all that, do you as organizations commit to sharing your data of your company with Professor?
No, no. Absolutely. First things
No,
first.
all leasing data
900 million
of-
market.
of all
we are not,
prestige things
we are
with
not
the professor.
25% of that. 900 million market, office market. We are not 25% of that.
No,
So
incremental.
I'm saying next
400 million,
yeah, in any
100
case,
million.
so I'll explain to you. We are working in the domain of compliance, Vipul Bhai. So no, by default, these leases are in the public domain the moment we ink it.
No,
and
with all
moment we
all the gray area, the question that you were raising in the previous session about super area, built up, sellable area, all those factors, because that will
Absolutely.
make Abhishek's life so simple.
You're in Bangalore, my friend. We are the most transparent people
Yes,
from that
answer
perspective.
is yes.
Please try and understand that.
100% yes.
Abhishek, that's 25% of market data for you.
Absolutely. Yeah.
We'll make sure the rest of the market also gives it to you.
Ha-
That's not-
No, absolutely. हवा बेच के नहीं खाएंगे.
Like US has NCREF, National Council of Real Estate Investment Fiduciaries. We need something like that in India. And I wish, leaders like you could come forward, because in addition to rentals data, they also have a repository of their operating expenditure, insurance, etc. It helps benchmark like STR does in hospitality. I think this discussion could perhaps lead to a thought in that direction.
No, it's
Ladies and
I'll
gentlemen.
just add one last point. It's so important that we give real data, because Monday, Wednesday, Fridays, IPCs come and tell us buy land. The rents are $120. Tuesday, Thursday, Saturday, they bring a 10 and they say $80. Where do you buy and where do you sell, right? You need data to decide, because Monday I'll buy the land and then I'm going to get acidity on Tuesday when I do a transaction in $80. And that's the problem. So, I mean, that's the market trend. So you got to be really careful about data.
Okay, so IPCs, please respond after this session. Ladies and gentlemen, please join your hands together for this panel. Thank you.
So we're just going to do the occupier perspective, and then Vipul can add some additional flavor. So Prashant, you want to lead it away?
It's a pleasant surprise. I get to host another constellation of star speakers in this session. On my right is Mr. Vipul Rungta, MD of HDFC Capital. We have Anurag Tyagi from Table Space. We have Ganesh Parmesh from Google. And we have Ram Chandani from CBRE. And this...
Sorry, just Prashant, I just put him on the spot by asking him to do the panel for this also. So sorry about that.
No, this is our occupation. We speak. So that is, and we like to have conversation with people who are knowledgeable of their areas. So the previous panel was focusing on owners and occupiers. That is one side of the business. Every time I start teaching a course on real estate to my students at, my MBA students who are not acquainted to the world of real estate, their perception of real estate industry is overwhelmed by owner occupiers. They think real estate means developers and builders. What they do not realize is how sophisticated the analytical and decision-making framework is on the tenancy side. Many a times, like in the case of Google or Walmart or Reliance like companies, large companies would have corporate real estate experts on their payrolls who are doing their strategic facilities decision making. And many times they will go to advisors like Ram, and then they need that prop to do that decision making. So of course, from the supply side of commercial real estate, data transparency like rental index is going to add a lot of value. But now we need to learn from the demand side. And we have people here who has been talking to a swathe of different types of prop tech firms who, of course, come from both the sides and many other dimensions of commercial real estate. So you're not primarily from the occupier side, I would say. You're more global in that nature. But if we could start with you on trying to understand your perception of the sophistication in the occupier space of commercial real estate in offices, like HDFC facilities, how would they be picked up, and what are the challenges, what kind of solutions you see coming in the market, if you take a few moments to.
I can talk about it. As bankers, we really love talking, so that may not be of too much significance and substance. But I think not to take away the thing from what Abhishek and team have been doing. I think probably just going off the topic, but what I was talking to Professor about is, and what I found most intriguing, is about what is a good start and very promising start and can be extended. The part which I liked in Abhishek's thing was that thing where he had 6 boxes. He said, today we are doing only grade A office and tomorrow it can go to work. And in his speech also he mentioned about how this is just the first step. And that I think is very, very transformational. It will be a big, big factor. Grade A space is obviously the most precise data set. In a lot of the data is also pretty much shared. On an average, there will be 70 to 80% accuracy that you would have. As you move into others, the data accuracy keeps going down. And that much more relevance for an index. That much more thing, not only from a buyer's perspective, seller's perspective, so on and so forth. To your question about this thing, I think Anurag and Ganesh will be and Ram obviously will be a much better bet in terms of thing. I can talk about HDFC, but as a group, we have something like 200,000 employees as HDFC Group, or 250,000 employees actually, including the subsidiaries. And we are not exactly what I would say the best in terms of, despite being this thing on the housing side, on the commercial side, not exactly the best group in terms of managing our office real estate in a consolidated manner. A lot is changing. That is changing in a big way. We have something like 8,000 odd branches only of the bank. And that is expanding at almost 1,000 branches a year or something of that sort. So the key point here is that things are changing. As a user, as a tenant, a lot of things are what is required, whether it's green, whether it's efficiency, whether it is proximity to public transport areas, so on and so forth. In a BFSI sector, the needs are very different from what it would be as compared to all these things, and what is bulk of the commercial market, which is actually not BFSI. So, or banks domestically. But just to spend some time, and maybe with Professor Venki, I can talk about it, about how this can be extended more to the other things, and what is the feasibility of doing something like this across not necessarily only commercial, but also housing, which is the more important thing. So I'll leave it to Anurag and all.
Yeah, I guess Anurag, it looks like there is a sales pitch for Table Space here. In full disclosure, I have no affiliation to Table Space. How are business models like yours disrupting the office space, and disruption in a good sense, because Vipul is all about disruption in this sector, and we celebrate disruption here. I mean, if you could throw some light on what you do, how you do, and how is it different from, let's say, a typical co-working business model?
So I think there was an inherent demand. So more than a disruption, that what happened is that there's an inherent demand, and I come from an occupier background myself. Recently joined table space, so I'm looking at the industry for the last 25 years and looking at it that no, look, there's always a time gap, right? From a decision making to the point of going live, right? And Ganesh would agree with me, the decision takes longer than expected. When the decision is made, then you want it as of yesterday, right? So there was an inherent requirement for the model to kind of develop. Now, as far as the flex industry is concerned and how we are different, right? I think there need to be a industry sort of recognition from a perspective of flex is different, managed office is different, right? Because from our perspective, it is 100% customized. It is like we get into the shoes of an occupier to understand what occupier needs. I do have a design house team, which is 100 people, to kind of work with the occupier. And as Vinod said, that, the client is not the CRE anymore. The client is the person who's walking, right? Work with the team, right? Understand what they needed, build design and space, which is 100% customizable to a particular occupier and not a, a cookie cutter sort of a thing, right? So that's one differentiation. The second differentiation is tech, right? We are a we are when we started with tech, okay? We are a tech company with real estate, right? So everything what we do is built on tech. Transparency, to the occupier is a very, very important factor. And we all talked about the
What kind of
credibility.
transparency are we talking about?
So when we build, we provide the information right from the point of what the decision making has to happen to the point of construction to the point of go live, right? Because of the fact that what happens is that when you're making a decision, as I said, that they wanted as of yesterday, it becomes a very important factor for occupiers to kind of go live because they have already committed to the global head officers, etc., to kind of say that, look, we have to go live. These are the people who are coming in, businesses, and
Anurag,
so on and so
that's
forth.
very intriguing and
So,
fascinating. Sorry to
yeah.
interrupt. But I'm wondering, how do you get access to individual occupants given a layer of HR or administration in between?
So we work with them. So we work like the occupier would work, a CRE function is going to work, and we partner with them to get an insight into the HR, to finance, to the businesses, to the people. We do the interviews, for the set of people who are going to represent those businesses who's going to occupy that. We would take that data, convert into the requirement, do the design, go back to the occupiers to kind of say that this is what we are looking at it, change, and everything is on tech.
So on whose behalf are you working? Are you representing the tenant or you're representing the landlords in this deal?
We are always tenant representing.
You are always working for a tenant who has signed a lease space and now they want it customized.
No, so the model, the way it works is that no, it can work in two ways. That it's a wherein the occupier comes to us and that they decide that which building they want to, and then we built it, or we do speculative. So we have taken speculative. We have bought buildings as well, right? To kind of that whenever the occupier is going to come, we will build for them, right?
Okay. So I'll get
So
back to you on this question because I have a lot of curiosity here. Let's move on to Ganesh. Ganesh, we want to hear about the state of the art, and that is perhaps happening at your offices. So what is the coolest thing what kind of technology you have adopted and how you see the use of data analytics in the office space?
Yeah, data analytics starts even before we start designing and building an office, right? Especially in Google, we work like a sales organization. So we need to put buildings in pipeline. It takes us 3 to 5 years to bring buildings online. We have to secure a building, complete the leasing, then fit it out, and then people to move inside. It takes a lot of time. So we even do like dog fooding or like testing for about 3 to 6 months before we put the first employee inside. It's like just like a hotel, right? So it takes around 4 or 5 years to get it in. So data points are everything in decision making in Google, from the building we choose, location we have to be in, what is the talent input and everything like this. So we plug in data from HR, we plug in data from our existing portfolio, we plug in show-up rates, we plug in demand forecasts, everything into it to selecting a building. Once the building is selected, it also talks about efficiencies and how many people we can fit into that building, because we might not get an exactly a 4,000 seater, 5,000 seat exactly, because we'll have plus or minus square footage. So then we have to look at how we do seat sharing, and then designs are now then evolved based on that, right? How the mix will be there, how the traffic will move across, everything, including like lift elevator data to find out how many elevators are required in the building. So we go very early to developers and tell them we need so many additional lifts, so that's so much speed. We need probably shafts here. We need like we have installed the world's largest or Asia's largest stage glass in one of our Bangalore offices, which will be opening recently. It has so much of data points. Every panel gives you data to tell the HVAC system what is required. So data is driven throughout the designs. I heard Nrupa and Jackie talking about technology being there. We've always found that we just put our head into technology, but we don't go deep into technology. Some of these data we can't utilize at all. I mean, it just generates data in the BMS room and nobody can use it. So what we try to do is to get this BMS data in, right? Everything, our food systems, our travel systems. So today a chef in our office needs to know how many people will turn up on a Monday or a Tuesday or a Wednesday, which cuisines will go. Is it Navratri time? Will chicken go lesser and everything? So he's basing his demand because somebody like a Compass or somebody like a Mohan Singh is also judged on their SLAs of how much of food wastage is there, how much of cab no-shows are there. So data runs everything in Google. Of course, we're a data company, but there's no perfect data. And that's why we speak to Abhishek a lot as well. There's no perfect data. We do predictive analysis for 5 years to know where the market would go and which city we should be in. Because by the time we take Jaggi or Vinod, will increase the rentals, right? I mean, I'm looking at 60 now and then go back in 5 years, they'll come back and say, no, Ganesh, when take the 50, it'll be like 100 rupees now. So we have to look at data, and that's what is going to predict our future. How do I bring business from US to India? Is to tell them that I am still cost effective. I'm not saying we are cheap. We shouldn't be cheap. We should pay for the buildings, the right rentals, for the right technology, keep the developer happy, because the relationship is a 20, 25-year relationship, right? And we don't go and just squeeze them out and then say that, okay, give me everything. And then it's like, the system has changed, right? People like Anurag have come in between to de-risk some of our anxieties in the company. So when a developer invests 5,000, 6,000 rupees to build an asset, I spend 10,000 rupees to fit it out. What if my demand goes down tomorrow, right? So these guys come in to fill in that kind of risk. It's something that sometimes developers also take care of it because they are flexible with larger clients, are able to structure deals better for us. But data is everything that we do. Designing is just one small part of it, but data starts from the day somebody throws a requirement in.
Very interesting, because some of the points that you talk about also refer to automation. I mean, automated process of building something sustainable, because sustainability is not just about green building and carbon emissions. It's about indoor environment quality. It's about human comfort. And when all those panels are sending you those data and your HVAC systems are automatically calibrating and responding, I think so. I'll get back to you on that point. We have Ram with us. Ram, when we come up with a rental index like this, it of course builds transparency on the space market side. We have a decent sense on the top line of the owners and developers of office spaces. When you look at cap rate trends in India, that part is severely lacking in transparency. And of course, IPCs like yourselves would have a decent amount of data. When you look at data from, let's say, Euromonitor on yields in various commercial assets, you don't see them varying with market trends. And that makes one wonder if that is because of absence of data. Because if, between 2 time points, data is absent, then you will, of course, draw a smooth line between them. But in reality, it could have been very volatile. I'm sure as a consultant, you are facing such challenges as well. And there may be times when the counterparty will come and say, where did this cap rate come from? How do you go about when it comes to estimating capitalization rates or cost of capital, cost of debt in asset valuation?
I think the key is transparency, as we all been talking about, right? Whether you're selling a grade A asset or a grade B asset, who are the occupants, and of course, the rental benchmarks make a big difference when you're selling a completely leased asset, which is based on a cap rate. The benchmarking is different. If you're pre-selling to investors under construction, the numbers change differently. If you're also selling a tenanted asset to a non-institutional player and selling it to investors or strataing that asset to smaller investors. And today we're talking about the tokenization of assets, which is going to be in some shape or form in the future. There are benchmarks to it. So when you talk about cap rates for an institutional buyer, whether it's a Blackstone looking at a matured asset, or a developer wanting to buy an asset to bring into his REIT portfolio that they continue to do, there are benchmarks there. And of course, that's cost of borrowing is such an important aspect, the covenant tenants, the quality of tenants, what percentage of leasing activity is already pre-committed, is there an upside for me, what's my rental benchmarking over the next 10 years, do I need to spend on asset upgradation? All those aspects are very important when you look at putting a number or putting an offer on the table when you want to acquire an asset. And of course, there is an unorganized market. And if someone's buying it saying, hey, if there's a developer who's selling a tenanted asset to a bunch of strata H&I investors, they don't necessarily care about cap rates. And those are done at 5-6%. So you're buying product saying, I want to create some rental income for my son-in-law, my wife, my daughter, XYZ. I want to create some rental scheme. We will see capital appreciation. So the benchmarks are very different.
I see. So in a way, Ram, I'm also pitching my friend's new index to you because there will be granularity in this index. And you can look at, volatility and standard deviation in the index itself, which may inform you about micro markets and, give you a comparative analysis of cap rates. I mean, I'm very excited about this index.
No doubt. And I'm glad IIM and Abhishek, CRE-Matrix are coming together to create this index. We've done something similar, which is proprietary to us, because when we're negotiating on behalf of occupiers like Google or Apple or XYZ, I think the important part is we have benchmarks of what previous transaction has. What are we negotiating for? The type of product, the term of the lease. It's a good thing to bring in an index like this to bring in visibility across the country. We create something which is when we put into a negotiation plan and discuss that with the occupier. And of course, rental benchmarking is absolutely important on where were the last transactions done, who are the occupiers, the size of the transaction, the quality of the product, super built carpet area, which is very, very important in an India context because nobody follows BOMA standards. So all of these benchmarks are absolutely—
Building Owners and Managers Association, is that what you're referring to? BOMA standards?
That's basically the way you measure super built or carpet area and rentable area, right?
Okay.
Because that's an important negotiation partner. And then we create a negotiation tracker that we agree with our occupier client before we go back to a developer, right?
Correct. So the Model Tenancy Act could act like a counterpart to RERA in this space, because in RERA, they have clear-cut rules on super builder versus carpet area. And I assume that hasn't come into the commercial space yet, correct?
When you're selling, and if you're selling to investors during construction, you have to get RERA approval.
But not for rentals. No. So that's a very valid point that you raised.
But the product, and I haven't seen the details of the product from what I've seen this morning with the launch of the product, I think it's a good initiative by IIM as well as CRE to really come together to create this rental index.
Yeah.
It gives you a good flavor of what's happened, but timing. Yeah. Can you future predict? Because a developer like Vinod, when he leases his first space in a building, or Jaggi or Nirupa, who was sitting in the room here, at X rupees, their expectation is to take the rent higher across the building, right? If you did a deal at 100 rupees, your expectation is my last square footage, I want to make ideally 150 rupees.
Correct. So let me switch to Vipul. Vipul, $1 million question. Ye dil mange more. So now we have an office rental index, and I have heard you talking about residential index as well. A, do you see any movement in that area? B, do you see it feasible?
Okay. So first of all, I have a little disconnect with what Ram said about all the developers wanting to constantly just increase the rentals. I don't think that should be the idea. As a consumer, maybe the people on his left and my right disagree with that, because it has to be something proportional. But then the cost of funding should also keep going higher.
More the rental, better the brokerage.
Work like that. It doesn't work like that. So, but on a serious note, I think it has to be. Yeah. So, but on a but coming to the index, we have to be very clear about, and we were talking about in the previous thing also, what is the problem of an index? The biggest problem of the index is data. And if the index tries to come and solve all the problems, including giving you all data as on today, and also predict what is going to happen, then I think somewhere it will lose the basic thing of what it is meant for, which is credibility. I heard this word credibility at least 6-7 times in the last 3 hours. I think we should not lose that thing. You talked about feasibility. I'll come to that, but I think that's a very important factor of credibility also, because if you add feasibility to it, then other words like neutrality have to come to it, conflict of interest has to come to it, white labeling has to come to it. I think Anant asked that question about what is the role of IIM Bangalore vis-a-vis CRE-Matrix on this? Because CRE-Matrix is a research agency which is in a certain way doing research for profit. And IIM Bangalore is an academic institution which is doing something which is on the technical side of it. So where is it the level of credibility coming in? So I think coming back, you should be very clear that your index is something as on date. Predictive, I think Professor Venki mentioned this, predictive is something that is for the everybody who is using it to see given their constraints and their own data sets. Ram is not going to share his own proprietary data set with CRE-Matrix, right? Because he mentioned it's proprietary. He needs to sell it. It is not available for free. That is what he meant by saying proprietary.
We've created because that's what we use as intelligence when we're negotiating and representing our occupier clients. So we of course do subscribe to CRE-Matrix because we don't want to go and deal with the registrar's office to subscribe to leases. They do a fantastic job. That's available. We subscribe and we pay a lot of fees for that. But that is utilized and then benchmarked with the data we have, because we are tracking not only our transactions in the market, we're tracking that every transaction that happens in the market to be able to go back, and that's a value add in our negotiations on behalf of our occupier clients, to be able to get the best outcome for them.
No, absolutely. So coming to the feasibility part on a residential index, I think the data in residential is even more discrete. It is all over the place. If you have 5 variables or 10 variables in commercial, I think you have 100 variables in residential. Having said that, I don't know if it is known, there is a residential index that exists. There's a residential index that has been made by RBI and NHB. For whatever it is worth, I was part of the making that index in 2007. It is, I think it's this thing. So it is not something which is very popular. It is not something which is used by any of the industry people on an average to make business decisions because of just the credibility aspect as to how representative is that data. So to your point about feasibility, I think there is some serious effort going on in this regard. If this particular platform also joins that effort, that would be great. Anand talked about it at the SEBI level. There are at least 2 or 3 other players, couple of non-profit players who are trying to aggregate data. Now data is available. Like you can read a lease deed, you can also read you can digitally read a sale deed of an apartment. So there is enough and more that analytics that can be played on that. So it is feasible to your question. It is it going to happen? Yes, it's going to happen. Is it going to be sketchy? I think it's going to be much more sketchy than what has been put here, but it will be a start.
That's very exciting to hear that from you, Vipul, because you have been in talks with many agencies like this. Ganesh, coming back to you, Google has its offices, high-tech offices that we all want to learn about. But beyond Google, how do you see the role of large tech companies in shaping India's office market in general? Because earlier in the session, a question was raised regarding representativeness of a rental index where you are only tracking registered leases. And the hint was that aren't we only talking about big ticket, large scale leases? Is that representative of the rest of the market? And but to my response to that would be very simple, that the rest, like grade B or grade C offices where people do not necessarily register their leases, their price movements are closely tied to the price movements of these blue chip leases. So what happens in the blue chip tenancy space actually tells a lot of signal about what would happen in, for a lack of words, lower tier asset markets as well. So, as Spider-Man said, with power comes responsibility. No, you guys are running some of the hippest and hottest office properties in India. What you do will shape the rest of the office market. What do you see is happening? How do you see your role in the office space in the broader market?
Yeah, let me first clarify. India's real estate developers are one of the best in the world, right? I just want to tell you that because we don't have the flexibility and the kind of terms and the kind of approach to get a client inside, whether it could be 100,000 square feet or it could be 1 million square feet. I think the same effort is put. I run so many RFPs in the market. I haven't seen a single time, even if I've not given the RFP to them, next time not come and then do it. Sometimes we treat our developers like dinosaur age. They are not. They're just so simple that we assume that they're not sophisticated. They're extremely sophisticated. They're extremely understand. I can see it because when we compare global markets to Indian market decision making, here I did not give up single space during COVID. I was able to go back and renegotiate my leases. People were understanding. They were okay to give money out of their pocket to keep the client there because it was a win-win situation. If they lose a client, they also have to pay money and then get cost of acquisition, and we have to go back, then pay 150% again to get the space back. Today, we are in a good space. So I just want to clarify that actually we have one of the best set of developers. I mean, there could be somebody who's not able to take the risk, and that's why their risk appetite is lower, so they're not able to get into that. But in terms of, yes, so we are seeing, and we do have a good set of people, like developers are good friends with themselves. There are also a lot of occupiers who are good friends, and we have our own WhatsApp groups and different forums that we connect in. I think we all work together to see what we could do best in the industry to get it right. Like I told you, sustainability. I've gone to developers who publish beautiful reports, and probably they have a good creative guy to publish the reports. When I go ask data points, they don't know. But there are some developers who do more things than what we do. And when I go to Green Clause, I have to add 5 points from what they have done as well to do it. So I think we are able to see that kind of trend happening. In terms of large tech companies doing it, of course, we take our ticket size is larger. We do operate in now in India is great with campuses, right? We don't deal about standalone buildings. It's at least minimum 2 or 3 towers in most of the places. Let's assume that Google takes 1 tower. Whatever we ask in tower 1, the smaller tenants in tower 2 and 3, by no means they are lesser, smaller companies. They're good companies, but the requirement in India is only that much, or in that city is only that much, or they're in multiple locations. They only need like 2 floors or 3 floors. They are also going to demand the same thing, right? So only thing is that we need to ensure that the standards that are applied keep improving, and we see that kind of improving. I would put it the other way. The large developers are actually moving the smaller developers to actually move towards those kind of improved spaces, because I can say anything from my desk. I don't invest in their building. They have to do the investment. They're actually looking 10, 20 years ahead of time. They don't even have Google signed up with them, but they're building for a Google. They're building for an Amazon. They're building for a Apple, right? So they are making all those bets. So I would say that we can only endorse those kind of decisions they're taken. Like Vinod said, not everything is 100%, and we don't expect everything to be 100%. If you are 50% good than the previous building, we're absolutely fine to take it. It's still an increment to go ahead and take it.
There is some spatial dependence. If your office is a high tech, then many adjoining towers would also want to be aspirationally.
Absolutely. I mean, everybody sees the leases as well. Like if somebody picks up Google's lease in Tower 1 and says that, okay, Google asked for all these things in their building. They wanted extra shafts. They wanted energy efficient chillers.
So
they're also going to go by
interest of time, I'll quickly ask a couple of questions because I can't hold my curiosity. Anurag, in hotel space, you have this concept of PIP, property improvement plan, where the owner would keep aside a budget to customize the facility for the tenant. In the US office space, you have something called tenant improvement, TI, and I'm sure some of the Indian space also has that provision. But those are landlords' expenses. I mean, incurred to cater to the tenants' interests. In the hotel space, a new breed of consultants is coming up. They're called hotel asset managers. Owners sometimes don't know how to deal with very sophisticated tenants, like these Marriotts and Hyatts, and so they have so the intermediary player is often in that case a representative of the owner who would be talking to an operator who is effectively a tenant. Now, your role seems to be coming from the other side. So in a way, it's innovative in nature. Have you been in situations of predicaments? What kind of business? How do you learn from the ecosystem if there are no precedences?
Great question. I think, look, why occupiers comes to us is to kind of provide that flexibility, right? And the flexibility works in two parts. One is to kind of say that, you can do, of course, it's a liquid real estate, which gives you a flexibility to go up and down, to manage the growth or manage the markets, right? So that's flexibility. The second flexibility which comes is that, how flexible you are to change to the needs of an occupier in an office and how fast you can do it, right? That's the second flexibility we provide to the occupiers, which is to the point of, when you say that, they're going to be an investment, what's required at a periodic sort of a thing, we built in right on day one to the amount of money we need to kind of spend to the period of the lease.
So Anurag, sorry, but I'm also trying to relate to the rents. So does this flexibility come from the landlord side? The landlord has to be willing for something like this. And if that is the case, does it lead to any rental premium? I mean, are your clients willing to pay a higher rent for that?
Okay. First of all, I concur with what Ganesh said. We have the best landlords in India, right? So that's number one. So yet we do get flexibility from the landlords in terms of even the base build improvements. Look, at the end of the day, if we are doing Microsoft, Shell, Google, or something else, we need to kind of get to the standard not only on the office, but on the base lease, right? So that's the flexibility we get from the developers to kind of say that let's work together to kind of build to the standard of the occupier, whether it's a base build or whether it's TI is not very popular in India. Okay, that's more like Australian, US sort of a thing. But in India, I think the developers are very willing and open to up the asset quality, and to Ganesh's earlier point is to get to the level of that, okay, this is the best building. They take a pride in sort of building the best building, which any occupier can't say no. Similarly, what we do, on the base of that particular building is to build an office, which none of the occupiers can
Got
say
it.
no.
So Ram, Vipul raised a very legit concern about availability of data, and I see where you are coming from. For IPCs, the biggest capital is the data and information, and it's very fair to have proprietary models because that is what your revenue model is. If that cannot go out in public, you are not educators. But do you see a need for finding a middle path that while indices like these are bringing transparency on the space market side, on the top line side, do you think that building more transparency on the capital market side, on the cost of capital, on cap rate, etc., will only help the rest of the market create more excitement about dynamic valuation? Do you see any room for large consultants like you coming up with proprietary databases like this at a price? Because there are clients who would be willing to pay for it. What is your view on that?
We're already actually doing it on the capital market side. There's a fair bit that we are educating. So a lot of investors who look at India, even before they look at different markets, they come to us to benchmark whether they want to make investments in hotels, office, retail, industrial, XYZ. So all that data and our consulting team and valuation teams is very involved in making sure that
But Ram, that is
that's
not coming to
customized.
schools. It has to come to
That's
schools. You have to create
customized.
an API.
That's customized for the clients based on data. Unfortunately, in India, I mean, like in the US, data is a lot more available. Today, even if you're looking at employee demographics in India, when you do labor analytics for companies who are looking to come and set up GCCs in India, the US market's very evolved. Some of the other Asian markets have evolved. India is still yet to catch up.
Okay.
So we are also talking to firms who have that data, because not all the data is with us. But we put it together so it's presentable to an investor to make that informed decision, to an occupier to make that informed decision, to a developer on what to build for the future. Our workplace team is involved based on working with occupiers to then marry that to be able to tell developers, please build a product of X, Y, Z. We've done benchmarking of business parks across India to go back and say what upgrades you need to make. Our workplace team is very involved with that. So we're doing a fair bit across asset classes. So on the capital markets side, benchmarking of land, previous transactions, as Vinod made a statement saying somebody offering him land at X and giving you a benchmark of rental Y. But all will depend on location, mass transport, quality of product, experience. What are you building for? Who you're catering for?
I'm glad to hear about the increasing sophistication with which you are.
But to the question you gave, Anurag, on tenant improvements, the US is very involved because you're raising capital based on those tenant improvements that are developers also putting. And Ganesh made a very valid point about our Indian developers. In the US, you're not talking to the promoter. Over here, you have access to the promoter. The promoter is engaged. He wants to build that relationship. The promoter is willing to listen to you, have that conversation, learning from you. And developers in the last 10 years have dramatically changed the way they're building and the quality that they're developing and investing back in their assets. Because they want the AAA clients who are looking at long-term relationships.
Correct.
They're here to stay. They're not flipping their assets and getting out. They're in the business for a long run.
They stick onto the assets and keep them on the balance sheet. Ladies and gentlemen, time for you to ask questions from the panelists. We can take a couple of them. Okay, please join your hands together for a wonderful set of panelists here.
Thank you. Thank you. Thank you, Prashant, and thank you to the panelist. So we are going to take a break. I just want to take up on Vipul's sort of a challenge on the residential space. That's very much on our radar right now. Because we actually had been involved with the governments. In fact, one of the things we did first when I started the real estate group is to work with the governments on estimating circle rates and guidance values for them. Because unlike in most countries, in India, the governments also need a good index for a good pricing model for real estate, residential real estate. So we are going to take up on that challenge, and I'm hoping we will work with Vipul on creating this, and maybe have another forum like this. Maybe 6 months. We'll give it we'll be ambitious and audacious on this, but I think that's something that's going to come. I want to now break off, and we will have our lunch. And I would want the panelists, because we have the panelists in a smaller group. Everybody else, please join. You have to walk a little bit to the other side of campus. It's called MDC, and I'm sure there are a lot of people here who will guide us. That's where our lunch is going to be. And that's it. And I just wanted to express a few words of thanks to a large number of people who made this occasion possible. Of course, the panelists, our partner, and of course, all of you who came here to sort of, I'm sure a lot of you were curious about what we are trying to do, and I hope you are reasonably satisfied with our approach so far. I also want to thank IIMB, our research group, my research team in the real estate space, a whole lot of administrative staff who had helped us do this. And I just want to, and hopefully our lunch will also be good for all of you. All right. Thank you, guys. We'll head out. And any feedback, please share with me. I think a lot of you can get my email ID. Please. Thank you.